हाँ, रिकॉर्डिंग है ऑनलाइन यूट्यूब पे भी अवेलेबल होगी, लिंक्डइन के ऊपर भी अवेलेबल होगी। तीनों मोड्स पे जूम की रिकॉर्डिंग भी है ना शफी?
यूट्यूब पे चले जाते तो वही लिंक सेंड कर देते इसको प्रोवाइड।
अच्छा, लेकिन जूम के ऊपर रिकॉर्डिंग चलाते तो है ना?
जी जी।
इन केस अगर एसएससीपी को कॉपी देनी हो तो मिल जाएगी ना? जी रिजवान स्टार्ट करो।
इसमें वेलकम एड्रेस आप करेंगे?
हाँ वेलकम एड्रेस के लिए मुझे बता दीजिए।
और तिलावत कुरान पाक
वो ऑनलाइन चलेगी, वो आप स्टार्ट नहीं ना?
कहने वही है ना, फिजिकल करने फिर की सारी सेटिंग अपना होगी।
इस तरह
आप ही आके तिलावत करनी
नहीं तो आपने वो ऑनलाइन तिलावत नहीं चलानी?
सर, उनकी शेयरिंग वगैरह सारी सेटिंग
कोई बात नहीं, ठीक है मैं कर लूंगा।
अस्सलाम वालेकुम डियर ऑडियंस, लिसनर्स, आपको सबको मेरी आवाज़ क्लियर है? थोड़ा सा बता दीजिएगा कि आपको सबको आवाज़ आ रही है। बिस्मिल्लाहिर्रहमानिर्रहीम। आज का जो हमारा सेशन है वो कॉर्पोरेट रीस्ट्रक्चरिंग के ऊपर है, और इसको स्टार्ट करने से पहले तिलावत कलाम पाक के लिए मैं दावत दूंगा मोहम्मद इमरान साहब को।
औज़ु बिल्लाहि मिनश शैतानिर रजीम, बिस्मिल्लाहिर रहमानिर रहीम। इज़ा जाअ नस्रुल्लाहि वल फत्ह वरअयतन अन्नास यदखुलून फी दीनिल्लाहि अफ़वाजा फसब्बिह बिहम्दि रब्बिका वस्तगफिर इन्नहु कान तव्वाबा। सदक़ल्लाहुल अज़ीम।
जज़ाकल्लाह सर। इस्लामाबाद ब्रांच काउंसिल के बिहाफ पे वेलकम एड्रेस के लिए टीएसपीडी के चेयरमैन मोहम्मद इमरान साहब को दावत दूंगा कि वो वेलकम एड्रेस करें हमारे ऑनरेबल स्पीकर्स के लिए, ताकि हम अपना आगाज़ प्रोग्राम का कर सकें।
Ladies and gentlemen, welcome once again. On behalf of Islamabad Branch Council, I welcome you all and the august speakers, Mr. Wasim Ahmad Khan, FCMA, MPA, ACFE, and Mr. Ibrar Saeed, LLM from SCCP. We are welcoming you, sir, at ICMAP, Islamabad Branch Council. This event is being organized in collaboration with the TSPD of Islamabad Branch Council, Technical Support and Practice Development Committee of National Council, and the Mergers and Reconstruction Department of SCCP. Today, we would be discussing different themes relating to and different modes relating to the corporate restructuring. Different modes would include mergers, demergers, amalgamations, reverse mergers, schemes of arrangement, schemes of compromise, amalgamation, etc. And we will also discuss winding up of and revival of defunct companies. And thereafter, we will have question and answer sessions. Today, inshallah, we would be having a wonderful session. It would span about 2.5 hours, and then we will have 30 minutes for the question and answer sessions. So without a further ado, I hand over the lectern to the Master of Ceremony, Mr. Muhammad Rizwan, for the introduction of our first speaker, Mr. Wasim Ahmad Khan. Over to you, Mr. Muhammad Rizwan.
थैंक यू इमरान साहब। हमारे पहले स्पीकर वसीम अहमद खान, FCMA, MPA, ACFE, हेड ऑफ मर्जर एंड रीस्ट्रक्चरिंग डिपार्टमेंट, SCCP. Sir, welcome to warm welcome to kindly enlighten us on this topic.
Bismillahirrahmanirrahim. Assalamu alaikum everyone. Good afternoon, somewhere maybe good morning. I hope everyone is fine and okay. I think we can start with the presentation. And although we have very few persons here physically, probably due to travel issues, due to ongoing cricket matches, international matches, which are going on in Rawalpindi. But I think there is a sizable presence online, which is a very good sign for us. For as a regulator, we look forward for your feedback, and we are already willing and ready to provide the guidance on different regulatory issues and the legal provisions. And as we understand, corporate restructuring is an evolving area. We have a big portfolio of financially distressed companies here in Pakistan due to the large magnitude of non-performing loans. And there are different modalities available under the Companies Act, and there are other provisions and other legal frameworks as well, which takes care of this scenario of financial distress. So I think we can start with the outline of the presentation. So this is a brief outline which we are going to cover today. This is the merger and amalgamation part. It will be followed up by revival and winding up of companies, which my colleague Mr. Brad Said will take care of. So this is the short outline which I hope I will be able to complete this outline and the areas covered thereunder within 1 hour or 1.5 hour before that, inshallah. So first, a short introduction about the SECP. The enabling law by virtue of which this organization has evolved from a government department, which was the Monopoly Control Authority, purely a government department. Sorry. So Corporate Law Authority evolved into Securities and Exchange Commission of Pakistan, which is an autonomous body formed under the SECP Act of 1997. And there are various laws which have been reenacted after the formation of SECP, like the Companies Ordinance 1984 evolved into Companies Act 2017. And then there are other laws as well, which contain provisions for corporate restructuring. But the primary law is the Companies Act itself, 2017. So you can see the different powers and function. Basically, it is about the role of SECP caters the regulation of entities, the corporate entities, the supervision, which is undertaken through inspection and investigations to ensure that the laws administered by the SECP are being followed in true letter and spirit. And then we are also responsible for developing our regulatory markets through various measures, through facilitative measures. And I think that today's event is a testimony of this evolving area of market development, wherein we encourage the regulators and all the stakeholders to come forward for resolution of their issues and to promote certain business areas which are hitherto undeveloped or untapped. So this is the whole spirit of the formation of SECP, and as defined its mandate, it is established for the beneficial regulation of the capital markets and superintendence and control of corporate entities. So we now coming to the mergers area. Basically, at the end of every law, when it is concluded, there is a statement of objects and reasons, and it is a comprehensive, you can say, statement. And the area pertaining to mergers and acquisition is contained in the statement in these words, which you can see in the first bullet. The Companies Act envisages the expeditious merger and acquisition mechanism as vital to address corporate solvency and growth. So how this expeditiousness was introduced in the Companies Act, we will discuss in the upcoming slides. So another administrative mechanism was formation of the Mergers and Restructuring Department. Last year, the Commission has a policy of centralization of different functions. Like we have centralized departments which were earlier scattered across different functional areas. Like we have licensing department, which was centralized. Again, it was a couple of years back. And then adjudication, supervision function. All these areas have now been clustered into divisions, And the latest introduction was this mergers and restructuring department, which earlier was this area was being taken care of through different functional entities, or you can say functional departments or wings. So MRD for short, merger and restructuring department, is responsible for handling schemes of arrangement, corporate restructuring and rehabilitation, and the revival of companies which are under winding up, and further issuance of capital. So in order to assist the department, because this is a smart department, we don't have a big team. Besides me and Ibra, there are 2 officers. So what we look forward, and to facilitate us, the commission has formed certain committees. One is the merger committee, which has representation from different departments, which are fully equipped to assist us in analyzing the merger schemes. And there are officers from the supervision side, the legal side, who assist us in this approval mechanism. For revival of companies, we have again the same departments which I have mentioned. And besides, we have, in addition, the adjudication department, which looks after the winding up of companies. And then we have the registrar of companies, who is responsible for filing the scheme sanctioned by the commission. So one more thing, what I was saying about the statement of objects and reasons, is that what is meant by the expeditious merger and acquisition. Basically, before the enactment of company law, the Companies Act, it was the courts who were responsible for taking care of all the cases, all the classes of companies whose mergers provisions were required to be approved. But when the Companies Act was enacted in 2017, this responsibility was entrusted to us, the SECP. But the Parliament was cognizant of the makers of the law was cognizant of the proposition that in one go it will be difficult for this authority to take ownership of all the cases of all the classes of companies. So basically, there was an incremental approach which was adopted, starting with the smaller size of companies. Basically, we have a classification of companies under the Companies Act. There are large size, there are medium size, there are small size companies. So what was done in 2017, SECB was only interested with the sanctioning scheme of arrangement for small size companies, while the rest of the companies, the public interest, large and medium size, are still being taken care of by the high courts. Another development was occurred in 2023. That was an event which was organized by SCCP in consultation with the World Bank. It was a symposium on corporate supervision and regulatory action, and where there was a large presence of professionals from the accounting and legal side. And it was we also had the privilege of having sitting judges of the high courts, and the Honorable Chief Justice Supreme Court also honored the occasion. And basically the takeaway, one of the major takeaways was that SECP shall be vested with the powers which right now are being administered by the courts. So this was a common theme of the event, that SECP shall be entrusted with this administration of the approval mechanism of the mergers and amalgamations. So basically, there is a provision within Section 285 of the Companies Act under which SECP can also refer the cases to the courts. But right now, the courts are directly taking care of this approval mechanism. So we have an understanding that we may acquire all these powers in respect of all the classes of companies from the courts, and thereafter the sanctioning of the scheme will be taken care of by the SECP itself. So we can start with, right now we are dealing with the schemes of arrangement, and there are maybe scheme of compromises. So what is a scheme of arrangement? It is a you can say a collective word for all the different types of corporate restructuring, which may include mergers or demergers or reverse mergers or reconstruction. So scheme of arrangement, basically it's a statutory mechanism for the implementation of a wide range of corporate transactions. And these are a flexible tool for reorganizing a company's capital, or you can say that if we talk about the merger, which in its general definition means the joining of two or more businesses into a new or existing businesses. So basically the scheme of arrangement, the law is very smart. There are just 5 provisions you can see from section 279 to section 285. But basically what is said that this is a judge-made law as far as the mergers and amalgamations are concerned. Basically, it is the case law which define or decide how a merger scheme is approved or how it can be worked out by the petitioner companies. So the law is very smart. These are just 5 provisions. And although the housekeeping or administrative mechanism is laid down in certain rules and regulation, which we'll discuss in upcoming slides, but the only legal provisions are contained in these 5 provisions. And then there is you can differentiate scheme of compromise from scheme of arrangement. Basically, scheme of arrangement occurs before a company goes into winding up or insolvency. But the compromise, normally it is done during the insolvency or winding up. So you can say that a running company can foresee certain problems or there may be an offer for merging or demerging, and it enters into an agreement or an arrangement with another petitioner, and then it comes to the approving authority, and this is how it is done at the pre-insolvency stage. But this is not so in the case of a compromise. Basically, a compromise happens when there is a dispute or there is a non-payment of obligations by one party to another party, or it may occur during the winding up stage. Although the law does allow a scheme of arrangement during a winding up stage as well, and in that case, it will be the liquidator of a company who will be responsible to file a scheme of arrangement, although it is very rare, but the law does allow a scheme of arrangement to be filed during a winding up. But insofar the spirit of the law is concerned, basically it is the compromise which is meant for settlement of the debts or disputes between different parties. So right now there is an evolution of the law insofar the scheme of arrangement are concerned. Although I think the scheme of arrangement under the UK jurisdiction was introduced as far back as in 1870. There was a law on scheme of arrangement, but gradually this phenomena has evolved, and thanks to the flexibility which has been introduced. And recently, the 2008 financial crisis that occurred across the globe and followed by the COVID epidemic, that resulted in a formation of a large number of distressed entities who were unable to pay their debts. So this is here where the SOA, the scheme of arrangement, comes in to facilitate or to, you can say, the rescue those entities which are undergoing financial distress. So you can see these sections. There are you can classify into 3 categories. Section 279 to 283, these are meant for scheme of arrangement and compromises. Section 284 is meant for wholly owned companies, and there is a fast track mechanism for such companies. They don't have to go to the court of law or to come to the commission itself. They have to just file a return along with the scheme of amalgamation to the registrar concerned, and he takes care of, after examining the scheme of amalgamation, the registrar is supposed to approve the scheme of amalgamation, and the requisite form is registered. So no sanctioning or approval is involved here. Because this is a risk-free area, so all the companies are wholly owned. So the regulator does not have any concern. There are no other stakeholders normally. So this is how and why the amalgamation is adopted through a fast track mode. And this provision was not there earlier under the Companies Ordinance 1984. It was introduced in 2017, as you have seen in the last slide, and there's a statement of object which says that expeditious resolution of solvency. So this is how that expeditious was introduced. First, SECP was introduced to take care of certain categories of cases, and then this amalgamation provision, section 284, was introduced with the objective that there has to be a fast track approval mechanism without going to the court of law or without coming to the SECP. Although SECP, the approval mechanism, the turnaround time for approval is far less as compared to the courts of law, the high courts. That's why the introduction of SECP and Section 284, we can say that there is a mechanism of fast track approval of cases. So basically, Companies Act is the major law which deals with the, as I've said, there are certain provisions which I have mentioned in the previous slide. And for housekeeping of this mechanism, there are Company Code Rules 1997, and then we have Companies Regulation 2024. So these are the different these are the different regulations which takes care of the how the law is implemented, the substantive law is implemented. Basically, I hope you would be aware of the fact that the law has a triage of frameworks. First, there is the primary law, the substantive law, which is the Companies Act. Then there are rules and regulations, which are, you can say, the secondary level. And then at the tertiary level, we have the guidelines or the FAQs, which you can say that these are the soft law. These are meant for guidance. And then the hardcore law is the Companies Act that has to be followed in true letter and spirit. But how it is administered, this area is contained in the secondary and tertiary level frameworks. So we have all these laws and regulation and guidelines and FAQs available on our website. These are the links. You can easily access these documents. And then we have a helpline. We have email address for raising of queries. And we normally have a lot of queries on different regulatory issues which have to be responded within a certain time frame. We have internal SOPs for these inquiries, and even there may be complaints against certain stakeholders. Even in the case of scheme of arrangement, there may be, you can say, disgruntled investors or minority shareholders who can come to us to raise certain issues or to flag certain areas which needs to be addressed, and SCCP is responsible to address those, or at least if these are the cases are to be approved by the courts of law, then we have to flag these issues if we found these complaints or issues justifiable. Not the vexatious issues, the frivolous complaints, these are not addressed by us. Based on certain observations or examination, we have to decide whether these complaints or issues have to be taken forward to the courts of law or to be addressed by us directly or not. Then we have certain other laws as well. You can see there are Competition Act, the Banking Companies Ordinance, the Income Tax Ordinance, which takes care of the provisions relating to different aspects. The taxation aspects, the Competition Act, basically, it's a law, just like the SECP was established before. It was Monopoly Control Authority. It was a government department. Then the Competition Commission of Pakistan was established pursuant to this Competition Act. And then they have an elaborate mechanism for approval of mergers and acquisition, which is a detailed process to ensure that there is no market dominance or undue or unfair competition. They take care of this particular area. And but the scheme of arrangement is an area which has to be taken care of by us or the courts. The BCO, the Banking Companies Ordinance, address approval of scheme of arrangement by the banking companies. There is a specific provision for those. Income Tax Ordinance, Section 97A, takes care of exemption. Basically, certain exemptions are granted to the companies, petitioner companies, if a transaction is rooted as a scheme of arrangement. So the Income Tax Ordinance take care of this particular area. And then there may be certain sectoral laws as well, like the telecom laws dealing with the approval of a scheme of arrangement for, although they, as a company, they have to come to us, but certain thresholds like the acquisition percentage, those are contained in the sectoral laws. As I have mentioned that we have recently issued the frequently asked questions on merger and winding up. So these are the key areas which we have covered under those FAQs which are available on our website. We have also circulated our participants who are working in registered companies or they are running those companies. I hope they would have received these FAQs through registered email addresses as well, because we have the details, the contact details of all the companies. But the only assurance we require is that the address, the contact details are updated. And if they are, we normally share the regulatory developments with our regulators to these different modes. It may be the social media, it may be the print media as well, it may be the website, it may be through email addresses. So these are the different modes through which we share the guidance documents and the regulatory developments, the new initiatives by ICCP. Sense. As I have mentioned, there is a triage of you can say approving authorities. At the top, we have the courts of law, the high courts, company benches, who approve cases of public interest, large size and medium sized companies. We were vested with the approval of small size cases in 20. That was followed up in vesting the SECP with approval of cases of public sector companies which are wholly owned by the federal government. There is Isha prayers, I think Azan going on. So I think we have to take a break for 30 seconds. So please bear with us. Now we can continue. So basically, I was telling that there is a triage of powers of regulatory jurisdiction, the courts, the commission, and the registrar. So at the top, there are courts, then commission. So basically, we started with the small size companies, and in 2017, and then comes in the entities wholly owned by the federal government in 2019. There was an SRO issued, and then recently in 2023, all PSCs, the public sector companies as defined under the Companies Act, which are the companies majority owned or controlled by the federal government, by the federal government only. So the definition, although the definition of PSCs also include the provincially owned PSCs as well, but the types of companies which SECP is interested with are federally owned public sector companies only. So this is the evolution basically, and we can foresee further addition to our powers, like we can take over the cases of public interest and large size, as was the recommendation of the symposium in 2023, where the judges of the honorable judges of the High Court, so they were very bent upon, they advised or recommended that these cases can also be taken care of by CCP in due course. So this is the triage, and finally the registrar concern is responsible of approving, or you can say the registering scheme of amalgamation of wholly owned companies. This may be wholly owned, it may be a parent subsidiary relationship, or even they may be subsidiaries of wholly owned company interest say between themselves. So these two scenarios are covered under section 284. 284 subsection 1 deals with parent subsidiary amalgamation, and subsection 2 deals with amalgamation of the wholly owned subsidiaries amongst themselves. So a little bit of explanation about what are the public interest companies. If you want to have a look about this classification in detail, you would have to visit the Companies Act third schedule, which provides this classification. Basically, the public interest company, these are the companies, although it is not defined in this terminology, basically these are the companies which are managing other people's money. So what we say, it may be public sector company, which are collecting taxes from all of us are taxpayer citizens. So they are running on our taxpayer money or certain borrowings or their own investment. Then we have non-banking finance companies which are regulated by CCPs or Mudaba company. They may be insurance companies, they may be brokerage houses. So these are the entities which are classified as public interest companies. And all these cases are taken care of by the courts of law. Then we have large size and medium size companies, and the size basically the size is defined or determined based on certain thresholds. It is basically the paid up capital, the turnover of the company, and the number of employees. So, for instance, a large size company has a paid up capital of 200 million and above. It has to have a turnover of 800 million and above. And as far as the number of employees are concerned, it has to have more than 750 employees. So there are lower threshold for medium size and small size companies. And based on these threshold, it is decided what the company has to decide in which classification it lies. And then it has to decide whether it has to go to the court of law, whether it has to come to us for approval of a scheme of arrangement. So, scheme of arrangement and the modes of corporate structuring, as I have defined earlier, basically a scheme of arrangement is a legal document used by the companies to restructure their affairs, which may include mergers, demergers, capital restructuring, or other sort of reorganizations. So, basically, what may be the possible reason for corporate restructuring? You can say it may be tax consideration, a company which is incurring losses and it becomes sick, it may decide to be merged with another company. So under the income tax ordinance, we have certain provisions like there is section 59A and section 59B, which takes care of offsetting of group companies' taxes and losses, although that is not a merger, but that is entered between group companies. We also do have Group Companies Regulation 2008, which facilitate this whole process of offsetting of profits and losses of group companies. So basically, tax consideration may be one of the major reasons by virtue of which a company may decide to be amalgamated or merged with another entity. And for that reason, it may also save tax by virtue of giving life to a sick company. And income tax ordinance do have certain other provision, like I have mentioned, section 97A, which deals with the scheme of arrangement of companies. Then there may be other consideration as well, like the group considerations. Merger or demerger may be carried out for, you can say, achieving economies of scale or for reducing cost of administration or management. It may be to meant for certain family issues, or maybe you we don't say family dispute, but there may be business restructuring for reason of, you can say, business restructuring. Presentation is out. इसको दोबारा शेयर करना पड़ेगा, दोबारा शेयर कर. Okay. So, I hope you can hear me.
टॉप शेयर करके दोबारा जो फुल व्यू आपका मिनट्स भी
Stop share.
जी दोबारा शेयर कर
Here it is. Yes.
एक मिनट्स का फुल क्लिक करके प्रेजेंटर व्यू राइट क्लिक
Presenter will be shown.
टॉप शेयर करके दोबारा कर ठीक है ओके दोबारा शेयर कर
There is just give me a minute. Basically, the system has restarted. Okay. So we were discussing about certain concern. It may be tax or group concerns.
On the area में बात की, do you mean the reduction of fixed cost or something else?
Yeah, it may be reduction of fixed costs as well. Basically, by virtue of having a big business resulting as a merger, certain costs may be reduced as well. This is how the economies of scale work. A small business has you can say the variable cost may be, fixed cost may be much higher. So what is done through a scheme arrangement that likewise the areas which are like there are two group companies which are undertaking similar sort of business. So if they can combine, so what they can do, they can cut down the cost, the fixed cost can be cut down. So this is how it works. And then there may be other, you can say, areas as well. You can say there may be a sort of milder merger. You can say what is a milder merger, which is basically the transfer company uh, which exist. Transfer company, low state exists and transfer company exist. So the company can, by virtue of this transaction, they can avoid stamp duty which may become payable by virtue of transfer of assets under the other provisions. Like for sale of asset, there are certain provisions under the Companies Act, like Section 183, which deals upon the power of directors. So if you just sell an asset or an undertaking is defined to be to have a threshold of at least 20% of the business. So if you sell a business directly without going into a scheme of arrangement, you would have to pay certain charges or duties to the government, like the stamp duty under the Stamp Act 1899. But you can circumvent, which is legally allowed by entering into a scheme of arrangement. You can combine certain transaction, like the sale of asset, like the changes in the share capital of the company, things like that. These can be combined into a single scheme of arrangement, and that may lead to certain exemptions or concessions, like the from payment of taxes under the income tax ordinance. So basically, these are the justification or the rationale for entering into a scheme of arrangement by different companies. Then there are different types of merger. There may be, you can say, horizontal merger or vertical merger, depending on the need of the business entity. Basically, horizontal merger is entered between two, you can say, side by side, the entities which are maybe of equal size or carrying on similar business. A vertical merger may be carried on between companies which in the same supply chain. One may be the supplier, the other may be a customer. So there are different modalities, but in so far the law is concerned, it deals about the mergers or demergers, although these terms, the mergers or demergers, are not defined within the Companies Act, but there is a common understanding which we will deal with in the upcoming slide one by one. And the process which the underlying process is almost the same, whether it is a merger or demerger. Basically, a formal proposal is initiated by the board of director, and then it is approved by the company's members before it is sanctioned by the approving authority, whether it is the court or the commission. So merger of two or more companies, basically, as I have said, the word merger is not defined, but basically it is a combination of two or more entities which merge their identities to form a different companies. There is a famous definition contained in the Halsbury's Laws of England, which is considered an authority, that merger is a blending of two or more existing undertaking into one undertaking, the shareholders of each blending company becoming substantially the shareholders in the company which is to carry on the blended undertaking. So there are many cases, famous cases of mergers globally, like there was the Daimler-Benz and Chrysler merger, which led to the formation of Daimler Chrysler Company. Then there was the case of JP Morgan and Chase Manhattan, by virtue of which the merged entities evolved into JP Morgan. Then there was the Exxon and Mobil merger that led to a new entity. So there are many cases again here in Pakistan. We have many cases in the private and public sector, which we touch upon shortly in the coming slides under the case laws. So basically, mergers are maybe of different type. There may be horizontal mergers. I have said like similar entities of the same size of business. So what is done? It is meant for duplication of facilities and operations by horizontal merger. So the purpose is to obtain economies of scale in the production. Then we may have vertical merger. This occur between firms in different stages of production and operation. There may be backward integration or forward integration. One of the famous cases was of Carnegie Steel globally, which is a renowned case of vertical merger, wherein the Carnegie company was only producing steel, but in the production line there were various processes like the mining process, the extraction of the ore process, then there was a shipping or transportation process. So all these different companies were merged into a Carnegie Steel company, and this is a famous case of the vertical mergers. Then there was another case of American Apparel, almost on similar lines. The brand company, the company which was running the brand, it takes over all the different processes from dyeing, finishing, designing, sewing, cutting, marketing, and distribution. So all these steps were previously taken care of by different entities, and then American Apparel, the merged entity, takes over all those processes. Then there may be conglomerate merger, basically, which is a merger between two unrelated industries. So this is basically in the unrelated line of business. So like the Procter and Gamble, when it acquires the Gillette company, that was a case of conglomerate merger. So these are the different types of within the merger community. And then there may be different motives of merger as well. Like it may be procurement of supplies, like through vertical merger. There may be market expansion that may be through horizontal merger. Then strengthening the financial position of performance. There may be a motive of business diversification. There may be taxation benefit, as I have mentioned earlier. So these are the various, you can say, justification or rationale for going into mergers, basically. Then there may be demerger of entity into two or more entities through splitting off or spinning off existing entities into two or more than two entities. So basically, the cash-strapped firms, the companies which are short of cash, they may divest the undertaking to build up their liquidity. That may be a reason for, you can say, demerger. The famous case that occurred here in Pakistan, basically it was a state-owned entity. There were multiple cases, even Pakistan Steel Mill case. So that occurred in, I think it was 2022 and 23. An entity was named as the Steel Corp. It was a limited company. So what was envisaged that Pakistan Steel Mill has to divest the operating assets into the Steel Corp, and the retained undertaking would have to contain only the non-operational areas. Similarly, there was the case of the famous case, which is still undergoing through privatization phase, the Pakistan International Airline. So PIA Holdco was basically formed as a separate company. It was registered with SECP, and then certain assets were transferred to PIA Holdco, and PIA itself contained the other assets which were supposed to be taken care of by the management, which was continuing. So that was another case of demerger. And now PIA has to be privatized, now which contains all the business operations and the employees which are running the airline or operating the airline. So right now it is an advanced stage. The bidding process, I think that has been that is undertaken at an advanced level. So I think in a couple of weeks or months, this transaction will see the light of the day. But that was based on the approval of scheme of arrangement by SECP, because being a public sector company, both these cases came to SECP. Being a public sector company is majority owned by the federal government, not the provincial government. And one more thing, if there is a company which is owned by a provincial government, then that case has to go to the court of law, because the notification in 2023 under section 285 that vested us with only those PSCs which are owned by the federal government. So if there is a provincially owned entity, there are a lot of companies which are owned by the different provincial government, the Punjab Road Transport Company, then there are Sindh agriculture companies, Sindh, even in the KPK Grid Company. There are a lot of companies registered under the Companies Act which are owned by different provincial governments. So for sanctioning scheme of arrangement of those companies, they would have to go to the court of law, the relevant court, whether the Peshawar High Court or the Sindh High Court or Lahore High Court. So those cases will be dealt with by the company benches of the relevant high courts. So demerger, again, there may be different reasons. There may be reason for strategic realignment. The seller may divest a unit which no longer fits with the strategic plan. So it may decide to demerge that or divest that part into a new entity. Then there may be rationale for efficiency gain, because a divestiture or a demerger result in an efficiency when the unit divested is worth more as against some other firm or as a standalone business. So that may again be another reason. The inability to adopt new technology. So an archaic, or you can say obsolete process is taken out of the existing entity, which is going to be technology savvy. So an entity or undertaking of that entity which is incapable of adopting new technology due to certain processes which have become obsolete or outdated. So that may be again a reason for demerger. And again, it may be again that undertaking may be an underperforming entity as against other undertaking within the same company. So that underperforming entity can be taken out of the main business entity through a demerger. So there may be a host of reasons leading to a decision to demerge or divest or spin off a business undertaking from a company. Now coming to the compromise, as I have said earlier, scheme of compromise, basically it's a agreement where a company and its creditors reach a settlement, more often to resolve disputes or reorganize the company's affairs. So basically, as I have said, that it occurs, normally it occurs during insolvency stage, not at the pre-insolvency stage, although the scheme of compromises are very rare here in Pakistan, although the law does allow scheme of compromises, but these are very rare. So that's the reason of coming to you, to ICMAP and our learned members, so that they become aware of what are the different modalities which are available under the laws for resolution of their issues which are pending since long. As I have said in the opening slides, that we have a very large portfolio of NPLs, the non-performing loan, which is going up and up. You can see, if you want to have a look, the State Bank Economic Bulletin. There is a publication which lays down the details of the non-performing loans, and I think that is issued on a quarterly basis. So we have seen that these indicators are going up and up every year. And I would like to mention a case study, basically in our neighboring country India. So the law that was introduced back in 2016, the Insolvency and Bankruptcy Act of 2016. So they were facing similar problems like us. So that was the law which consolidated all the different legal frameworks, just like we have, as I have said in the earlier slide, that we have the Companies Act and other laws dealing with restructuring and rehabilitation. So they consolidated into a single insolvency law, and they also managed to control their distressed financial sector and the corporate sector. So there is a progressive trend. The NPLs in the Indian economy, they are very much controlled as against us. We are witnessing a growing trend here in Pakistan, unfortunately, by virtue of, you can say, the legislative issues and the enforcement issues. And again, the banking sector, which is not willing to compromise with the entities which are ready to come up with certain plans. So this is where the new laws Basically, I forgot to mention there were other laws as well besides Companies Act, the Corporate Restructuring Companies Act 2016, and then the Corporate Rehabilitation Act 2018. These were basically introduced to take care of the distressed entities, the entities which are facing financial difficulties. So there were certain mechanisms there, but there were certain impediments in those laws by virtue of which the implementation mechanism could not work well. So right now we are in the process. The federal government has formed a committee which is headed by the Special Assistant to Prime Minister on Industries, and the Committee on Business Revival that was formed a couple of months ago, and that committee has formed certain subcommittees as well. And one of the subcommittees is taking care of this insolvency area. So what we have done so far on that platform is introduction of or suggestion of certain impediments which I have mentioned in the CRA, the Corporate Rehabilitation Act, and the Corporate Restructuring Companies Act. Like in CRA, the Corporate Rehabilitation Act, there is a mention of, there is a threshold of, you can say the default amount, which is very much high, it is almost rupees 100 million and above. So that means that only cases which exceed this threshold, they can opt for relief under Corporate Rehabilitation Act. But that is a very big amount. So what it has happened that the entities which are of a medium or smaller size, they are facing difficulties by virtue of this threshold. So this is like one of the amendment which has been proposed in the CRA to remove this threshold so that the entities which are on the lower side of this threshold, they can avail this mechanism or this facility under the CRA. So I think that restructuring is an area which is very challenging for us, and scheme of compromise, although I hope that the corporate sector, they may think over their strategy instead of taking relief or making the companies wind up or liquidate, which cause a loss of heavy losses to the members of the companies, because they end up with the only leftover assets, if there are any, after paying off all the liabilities to the secured creditors and other preferential creditors which are provided under the Companies Act. I think Abrar will take care of this area in his slides on business revival and the winding up. So I leave this area to him. And now we also look for other mechanism available under the Companies Act, which is the restructuring of share capital. So basically it involves the restructuring through reallocation or revision of shares among existing shareholders. There may be induction of new shareholders, or the existing shareholders may go out of the company. So all these modalities are covered under scheme of arrangement through restructuring of share capital. So what we have seen in a normal scheme of arrangement, it has different legs. Normally, it is very rare to have a scheme which covers only the restructuring of capital, or that is just a demerger or a merger. So what is done through a scheme of arrangement, these different modalities are combined. There is an issue of share capital to the shareholder of a transferee company, followed by a demerger. So normally we see different legs in a scheme of arrangement, and these are combined collectively within a certain scheme. So if you want to undertake a transaction on a standalone basis, like if you want to sell your assets, so that for that there are different avenues available under the Companies Act. And then there are reporting mechanism as well if you sell your asset or if you transfer your share. So there is a process of transfer of share capital. A certain stamp duty has to be paid under a law which is there under the Stamp Act. And then there is reporting mechanism to the registrar as well. Form 3 is filed for transfer of share capital with the SECP, and then the whole process goes on. But you can combine these changes in share capital along with the disposal of assets, or you can say payment of obligations through a scheme of arrangement. So this is the whole strength of this SOA basically. Then we have another offshoot of this whole process, which is called the reverse merger. Although it is very rare, a reverse merger occurs when a profitable unlisted company through instead of going through an IPO, which is an exhaustive process. It acquires or it targets a company which is listed on a stock exchange, but it is not running properly. So this is the concept of the reverse merger. The PSX rule book, which we call the PSX regulations, that contains a separate provision for the reverse merger, which has recently been updated. You can have a look at the this particular, I think it is regulation 5, February. The reverse merger transaction regulation 5 of the PSX rulebook deals with the yes, exactly, of the reverse merger. So this is the whole concept behind the reverse merger. So it is also called a backdoor listing because by virtue of this provision, the company saves from all the expenses it has to pay through formal, which is required under formal listing process, the IPO. Then we have the amalgamation of wholly owned companies under Section 284, which I have already mentioned. There are two scenarios, parent to subsidiary or subsidiaries inter-se. So both of these can be employed. And we have seen many cases of, particularly in the public sector, because the entities which are wholly owned by the federal government, and there are many companies in the public sector which are not running properly. So what they can do, like there was a famous case of Pakistan Industrial Development Corporation, and because this particular entity was established, I think it was way back in 1970s, and there were a large number of companies which were owned by the PIDC, and many of the subsidiaries were not running properly because those are meant for different sectors under the Ministry of Industries and Production. So those entities were not performing well, or they have become defunct. So what was done that the government decided to divest those entities. There were different options. It may be through winding up, it may be through striking off by registrar, but the most convenient option was through amalgamation, because it is a very convenient fast track process through which a scheme of amalgamation is filed with the SCCP and then it is approved. So these are basically the objective of a merger or amalgamation may be a dissolution. It may be other objective as well, as I have mentioned, like making efficiency gains. But for even dissolution as well, if you do not want to go or opt for a winding up option, you can dissolve your business entity through merger or amalgamation as well. It will also save your time. It will also save your cost, and it will be an efficient and effective option for you to consider. Although there are certain options under the Companies Act as well, like the Company Easy Exit Scheme, which is there for those entities which do not have any assets and liabilities. So that is also a fast track option which Ibrahim will discuss. So the procedure for public sector and small size companies, I think we have discussed a little bit the PSC's cases. So how it is done basically, the scheme is filed directly with the commission. We at the merger and restructuring department, we examine those such schemes, and then we basically we ensure that there is no harm or damage being done to other stakeholders, if there are any. There may be other shareholders as well in a public sector company. It may not be a wholly owned entity in all the cases. So we have to make it sure. It may be even if it is a listed company in the public sector, so minority stake is there, it has to be taken care of. So all these things are examined. The statutory compliance is observed by the registrar, whether the company have filed all their statutory returns. So this is one of the challenging areas for us as well, because in many cases we have seen the companies coming to us, but their shareholding position is not updated. They are not filing annual returns through which all this updation is done. They are not filing their financial statement with us. So we are incapable of having a look at the true and fair view, the updated latest position of the shareholding, the management, and all the things which are supposed to be provided to SCCP. You would appreciate that all the record which is coming to SCCP is not only meant for us, basically it is meant for the public. That is why every document which is filed with us is called a public document. And any person from amongst you, he can visit or he can he or she can obtain certified true copies even online right now. After we launched the easy file in 2024, now we have a mechanism of obtaining certified true copies through online mode as well. So any person who want to have a look at the corporate profile, he can visit our office, he can obtain certified copy from the registrar through the easy file mechanism. So basically all these are public records. So even as a corporate, if you are not willing or you are not complying with the law, so what harm you are doing, it is not, this harm is not done to SCCP, basically it is to the public, to the stakeholders. The company has a large number of stakeholders, suppliers, customers, related parties, taxation authorities, regulatory authorities, the community, the public, the general public. So all these are stakeholders, and if you are not getting your returns updated by non-filing, you are not only committing a default or a crime, financial crime, but you are also depriving the stakeholders with the true and fair view which a company is supposed to maintain, not only with itself, but only at the public office, which is the registrar office. So the background about all this is that if you are not updating your record and a scheme comes to us, we will not be capable of processing or approving that scheme, whether it comes to us or goes to the court of law. Even if it goes to the court of law, in our para-wise comments, the submission we made to the court for providing assistance to the court, we duly highlight this particular non-compliance, that the company is not coming to us with the updated details, and the court never approve a scheme which is followed by or filed by a company, the petitioner company, which is non-compliant with the basic provision of the law. So this is how the commission undertakes this whole examination, and then the commission or the court order holding of a meeting of members or creditor and the creditors if there are any. Members meeting has to be held, creditor meeting if there are certain secured creditors appearing in the books of the company or in the record of SECP. Then after the meeting is held, the chairman report is supposed to be filed with SECP or the court. And if the commission or the court is satisfied based on certain requirements of the law, as depicted from the chairperson report, that the quorum of the meeting, the requirement have been complied with, the concerns of the minority, if there are any, those have been addressed, and all the legal formalities and compliances have been complied with, after ensuring that the SCCP or the court sanction the scheme of arrangement. So whether it is a public sector company or a private size company, the same process is followed. In case of public sector company, what we foresee is that there has to be certain notification or approvals of the cabinet committee. It may be a cabinet committee on SOEs or any other cabinet committee owned by the federal government. It may be a cabinet committee of privatization as well, if that entity is going to be privatized in due course of law. So all these government entities or the approving authorities, their notifications matters a lot for us. So we ask for any such information from the petitioner company, from the public sector, and after having a look or examination of those documents, we approve the scheme of arrangement. For other PSCs, I mean the PSCs owned by the provincial government, the cases are filed in the High Court. Small size company, as I have mentioned, there are certain threshold which are provided. You can have a look at those threshold if you want. If you have the petitioner companies which are of small size, so you would have to come directly to SCCP and not go to the court of law. So this is a brief illustration of the various steps for filing a scheme of arrangement to the commission. Almost an identical process follows if the case goes to the court. You can see the board approval, then the scheme is filed with the SCCP. The mergers and restructuring department scrutinize the scheme and evaluate the scheme if there are any issues. So we have a merger committee, as I have mentioned in the earlier slides. It looks at the whole case. And we also normally, just like the hearings in the court of law, we may also conduct a hearing or a meeting with the petitioner companies to resolve certain issues. Ever since the MRD was formed last year, we adopted this practice of resolving the issues through meeting with the company. Earlier, there was a practice of writing of letters or emails, but that resulted in certain delays. So what we do now is to hold meeting. We have direct interaction with the companies or their practitioners. Many of us, our professional members, are serving as consultants. So we do have cases from the members from the CMA community, and we guide them as well. Because the petitioners are not directly themselves equipped to have a look at the understand the intricacies of the schemes of arrangement, because it is again it is a complex or complicated document. So what we foresee from the practitioners, if the companies come to us directly, we also guide them as well. So we hold meeting with the companies to resolve to get the issues resolved, and after a revised scheme comes in, or after certain regulatory compliances are done, we run this whole process again and approve the scheme, the draft scheme for holding the chairperson's meeting, the members meeting, the EOGM. The extraordinary general meeting is supposed to be held. The creditor meeting is supposed to be held if there are certain secured creditors. And then that meeting is done. The chairperson report comes in, and if it is in order, the SECP approves the scheme. So again, this is the whole process that is in the case of a public interest, large size and medium size, which has to go to the court of law. Almost an identical process. Insofar the law is concerned, there has to be have a board approval. And the additional step is that the High Court solicit comments from the SECP and other regulators. There may be other regulators as well, like the Competition Commission of Pakistan. If there are banking companies, then the court solicit comments from the State Bank of Pakistan as well. And every banking company, because it is a company registered under the Companies Act, even in the case of banking companies, we are supposed to provide our comments. Like we have earlier the famous Bank Makrama case, which was, I think it was a merger scheme. Then we have, yes, Bank Islamic. And then and Silk Bank. Silk Bank case was also there. Then there was a case of SME Bank, which divested its non-operational assets. So there are many cases under the BCO as well. But we also do have a role to play in such cases as the corporate regulator and registrar of companies. So SECP reviews the scheme, and again on the same grounds, just like a scheme coming to SECP for approval by itself, we also take care of all these things like the accuracy of information, whether or not the information updated, the statutory compliant has been made. The valuation is a particular area. Again, it's a complicated area. So we also see that because the valuation report is normally it comes through an accounting firm. So we also have a look at that valuation criteria, the company which has been adopted. There are different valuation methods under the IFRS which are available for a company. So we have to see that whether all the petitioner companies, whether they have adopted the same valuation methodology. It may be a net asset value method, it may be a book value method, and there are other methods as well. So all these areas are taken care of. And then the swap ratio calculation, basically that is based on the valuation as well. And swap ratio calculation is done to work out the consideration which has to be paid to the transfer company, basically the shareholder of the transfer company, because the business which is going out of the transfer company, so the swap ratio is worked out to determine the amount which has to be paid to the shareholder of the transfer companies as consideration. So again, almost the same mechanism for application to the court, just like we have seen earlier in the case of application to SECP. The only difference is that SECP is supposed to provide its pair-wise comments in the court of law. So in certain cases, we have seen that based on our comments, the court has not approved the scheme, and it has directed the petitioner to go to SECP and address issues before approval. So what the companies do, they normally file a rejoinder of the scheme or an addendum to the scheme, and they modify the scheme wherein we have raised certain observations. So through that rejoinder, the company normally address the observations. But in many cases, in certain cases, the companies, the petitioners, they do not agree to our observations, and we stand with our observations. So what the court has to do, that SCCP has certain observation which still remain unaddressed. So then the court will decide whether these observations contain certain weightage or substance, or so that certain mischief may occur or certain damage may be done to the other stakeholders or shareholders. So the court may decide upon this after considering all the stakeholder concerns. It may bypass or it may overdo all the observations of SCCP, or it may not sanction the scheme until all those observations or certain those observations are addressed. So until that is done, the scheme is held up by the petitioners until the issues are resolved. So these are a brief about the contents of the application to sanction the scheme of arrangement. You can see there are certain procedure formalities, like there is fee structure. There is a 7th schedule of the Companies Act, which specifies the fee structure that has to be paid by the companies while filing a scheme of arrangement with SCCP only. If that has to the court of law, that will not be applicable again, because that scheme is filed with the court of law. Then there are copies of board resolution, the board approval, because it is the very first process in this whole, you can say, the procedure. So board resolution are supposed to be provided, the latest audited financial statement, and the supplementary audited financial. Basically, Section 282 of the Companies Act says that the financial statement shall not be older by more than 180 days. If they are, the companies are supposed to prepare additional supplementary financial statement, and those also supposed to be audited. And unless that is done, because otherwise the whole spirit of this requirement is that the shareholders are presented, because it is the shareholders who have to approve the scheme. And if they are presented with outdated information, so they will not be making an informed decision. So this is the spirit of this, the justification of this provision, that the shareholders should have the latest updated information in hand before deciding upon a scheme of arrangement. And we also asked for, unless this compliance is done, we never approve the scheme. We never recommend the court of law to approve the scheme until this particular requirement is taken care of. Then we have list of secured creditors. The creditors, because they have a major stake in the company, just like a shareholder providing money in the form of equity, the shareholders are providing the finance in the form of their loans. So their concerns are very much important for the regulator or the court. So their NOCs are normally required for us before deciding upon a case. Then administratively, we also require pre and post scheme financial position, although these are not mentioned in the law itself. But for examining a scheme, what is the scenario before and after, we normally ask for such information. So if you are interested in filing a scheme of arrangement, so this information, which is not mentioned even within the law, we will normally require this information to assess as to whether what will be the financial position of the company and financial performance of the company after this transaction is done. Auditor's certificate, as I have mentioned, there is a report from the accountant for swap ratio calculation. We require a report from the chartered accountant for this particular area, and then there may be a valuation report as well. There are registered valuers under there is a regime for separate regime for that. There are registered valuers, which are, I think it is section 460 or 461 of the Companies Act, which deals with the registered valuers under the Companies Act. And then there are certain provision in the company's regulation which prescribes the qualification and experience requirement. There may be accountants, the chartered management accountants, and there are chartered accountant, cost and management accountants. There may be registered engineers as well. In case of assets, in case of financial assets, there has to be accountants who are fully equipped to evaluate or work out the value of those assets. In case of physical or tangible assets, there has to be registered engineers. who are qualified for that. In case of intangible assets, again, there has to be accountants. So there are different modalities depending upon the size of assets, depending on the type of assets. From whom this valuation report will come to us. Then there is an application for convening of members and creditors meeting. It shall come to us, and after this is granted by the competent court of law, the chairman report is issued, followed by an affidavit, which is a standard document filed with any application with SECP or even with the court of law. Again, for the amalgamation cases under section 284, almost similar information, but this is very much restricted. Again, due to the reason that these are lowest risk cases, these are the cases where there is no other stakeholder, they are wholly owned companies. So even we don't require holding of members meeting, because again, the board of directors approval will suffice for us, and there are certain fee requirement, then there is a scheme of amalgamation. There is a Form 8 specified under the company's regulation and regulation 60, which is filed with all these documents. The registrar processes document. Although MRD, the Merger and Restructuring Department, do have a role in this, we do examine this whole scheme from the same perspective that there are no other concerns or other non-compliances. And after all the compliances are ensured, we give a go-ahead to the registrar, because registrar is a separate body within SECP, and registrar register Form 8, and then that entity which is amalgamated, it is dissolved, and then a new entity is formed. These are the contents of the scheme of arrangement. First, we require a profile of the transfer and transferee companies. Then there are certain details regarding the shareholder. What are the rationale and benefits of the scheme? As I have mentioned earlier, there are certain justification. It may be a synergy, it may be a business spin-off, divesting a non-profitable entity. So there are different rationale and benefits of the scheme. Then what are the main terms of the scheme of arrangement? Like there may be an effective date, it has to be defined within a scheme of arrangement. And then the main terms of transfer of assets and liabilities as well. So basically a scheme has certain annexes which lays down what are the assets which are going to be retained for a retained undertaking, and what are the assets and liabilities which are going out of it in case of a demerger. So these are the main terms of the transfer, and what is the impact is going to be on the various classes of shareholders and creditors. Normally we have single classes in majority of the cases, but there may be multiple classes of shareholders as well, especially in case of large size and public interest companies. So what impact the scheme is going to have on all the pertaining classes of shareholders and creditors. Effective date is also important. This is the date from which the transfer and vesting of the undertaking of the transferee company will happen, or it will take effect. Although Companies Act does not define an effective date, but is supposed to be provided within the scheme itself. And this effective date is also important from the perspective of income tax purposes. Because certain assets are going to be divested from the transfer company, and that has a meaningfulness for determining the taxability of the transaction as well. So effective date is very important for the purpose of members as well, and also for the tax authorities. So this is the significance of this. Then again, swap ratio is an important area, because this is an exchange ratio which shall be ideally shall be worked out by a renowned firm of accountants who are expert in the field of valuation, and who shall follow a proper methodology and consider all the aspects, the financial aspects of the scheme. Then there may be certain conditions which may be attached to the scheme, and even the approving authority can add certain condition to the scheme. It may be the court, and it may be the commission. If we have, the court may have certain reservation while approving the scheme, so it may attach certain conditions to the scheme as well. So these are the contents of the chairperson report. Again, the same, everything from the start of the board approval process till the end of the process leading to the holding of EOGM. So this chairperson's report encapsulates all this whole process, the brief background of the company, the SOA, the holding of the board meetings, the holding of the EOGM, the quorum requirements, the dissenting shareholders who have voted for and against, and the extract of the resolution. So what are the roles and responsibility of the BOD and the shareholders? Basically, the BOD develop a scheme. It's the management who draft a scheme in consultation with their legal counsel or their accounting experts. These are approved and the resolution is passed. Then the scheme is filed with the competent authority. And then they nominate the chairperson for the members and creditor meeting as well. And then the meeting is held and lasted by the EOGM. Basically, Section 281 of the Companies Act also requires directors and the chief executive, the management, to disclose to the effective creditors and the shareholders if they have any material interest in the merger. So post-merger, an entity may evolve wherein any of the director or even the CEO may have a major interest. So all these interests are supposed to be disclosed before the members, basically. Then we have other laws as well, like the takeover law, the takeover ordinance 2002, wherein there are additional obligations for the director because those are specialized entities. And then again, they are being public interest. The directors and the members have additional obligations to the approving authorities and the majority shareholder, even the minority shareholder as well. So they are supposed to take care of those obligations. So I think it will be out the scope of this short session that we discuss the additional obligation of those public interest entities. So what are the post-scheme sanction steps? After the scheme is sanctioned, a certified copy of the order, if it is passed by the commission, the concerned department is responsible to provide a certified copy to the registrar. If it is a court of law, the registrar of the court is supposed to provide that certified copy to the registrar of SCCP, so that he become aware and he take further action, like within the system, within the register of companies. Every registrar of companies is supposed to maintain a register of companies under the Companies Act. So whenever a company is dissolved, whether through winding up through a merger, so he has to ensure that that entity is struck off or it is removed from that register of companies. So this is how it works, that whenever a certified copy of court order of the commission sanction order comes in, it has to be provided to the registrar forthwith so that he can take further action. And post that action, if there is a like demerger or the transaction involves certain changes in shareholding, then the company is supposed to file certain form like Form 3 for change in shareholding, Form 9 for change in management, the directorship. So all these post-sanction requirements are supposed to be taken care of by the transfer company. These are a few famous case laws from 1989, the Lipton Pakistan Limited case. So you can have a look at, these are available. You can have a look at these case laws for your enlightenment, and even if you are going for a scheme of arrangement, so you can seek guidance. But I will share a gist of these cases in the next slide, although it is outside the scope of this short session to discuss in detail, but these are interesting cases. Obviously, that these have been made part of the CLD case laws. Like the majority takeaways are that what the court has determined or resolved, that whenever a scheme of arrangement is found to be reasonable and fair, then it is not the duty of the court to supplement or substitute its judgment against the collective wisdom and intellect of all shareholders of the companies involved. So basically, court says that it is the commercial wisdom of the shareholder, basically, who has to decide. And if everything is in order, all the procedure compliances has been made, all the statutory requirements have been met, and there are no dissenting shareholders in majority, so normally the courts approve those schemes. So these are the basic precondition, and court do not normally intervene or interfere with the collective wisdom or commercial freedom. Also, it is said that the commercial freedom of the it is a commercial wisdom of the petitioners that prevails over everything. But there may be certain instances where court do not approve, like if the statutory majority is not there, then that is a procedural requirement within the Companies Act itself. Then again, court will not, although it will not rubber stamp a scheme of arrangement, it also have a look at the background and object of the scheme. You can see that we have came across certain cases where there were certain creative accounting practices which we have seen in certain transaction. There may be certain financial engineering going on. There may be a tendency to harm a certain category or classes of shareholder, which may be the minority shareholder. So there may be a swap ratio calculation which is outdated or based on valuation which is not up to the mark, or which is not like a petitioner company vis-a-vis a transfer and transferee. They are undertaking valuation based on certain different valuation methodologies which are not tying up. So these may be the reason based on which SECP can raise observation, and these may be the same reason based on which the court may not allow the scheme. But by and large, we have seen that the courts have gone with the collectivism, the commercial decision of the majority of the shareholders, because they say that shareholders are the best judges of their own interest, and they are better informed with the market trend as against any other entity, be it the approving authority, the court, the regulator, the taxation authorities. So, but there may be certain technical or complicated areas like the valuation of shares, for which the court you can say rely upon the report of the auditors. It is you, the professionals basically, the accountants who have to give an expert opinion. It will not be the SECP or any other stakeholder who will be fit, or you can say expert enough to decide upon or to give a final verdict. The court will primarily rely on the valuation report and the report of the auditor who is an expert in this field. So these are the basically takeaways from the case laws which I have mentioned in the previous slides, and I hope you would have a look at these CLD cases as well for your inspiration or your enlightenment, for understanding, for academic understanding. And even if you are interested in filing a case with us or with the court of law, I will suggest you shall have a look at these cases as well. So I think we proceed to the next part, which is the winding up and restructuring of companies through revival. And my colleague Abrar will enlighten you with all these, the nitty-gritties of these cases as well. So thank you very much. We will come up again with the FAQ session, with the question and answer session, and you can hold for a while your questions till this part is done. Thank you very much.
Ladies and gentlemen, this was Mr. Wasim Ahmed Khan. Thank you very much, sir, for your comprehensive and insightful presentation. Your deep understanding of corporate law governance, M&A processes, and regulatory framework has greatly enriched today's session. Your practical explanation, backed by your extensive experience at SCCP, have provided immense clarity to our participant on complex restructuring concept. We truly appreciate your time, your dedication. Before going to the next session, we have short announcement for you by Mohammed Imran, please.
Yeah, thank you, Mr. Rizwan. Well, ladies and gentlemen, let me remind you to put your questions using the Q&A mark tab that is at the bottom and in the middle. So you may type your questions. So by the time the second presentation is over, so we will have a number of questions that you want to ask. So over to Mr. Rizwan.
Thank you, sir. Now, ladies and gentlemen, it is my pleasure to welcome our next distinguished speaker, Mr. Ebrar Saeed, LLM, Additional Director, Merger and Restructuring Department, SCCP. Mr. Ebrar Saeed is a highly seasoned corporate law expert with more than 22 years of experience in corporate restructuring, regulatory enforcement, and governance. His work with SCCP and his contribution toward policy reforms, digital transformation, and complex corporate transactions have earned him recognition across the corporate and regulatory landscape. Please join me in warm welcome Mr. Ibrar Said as he shares his knowledge and practical experience with us. Sir.
Thank you for the brief introduction, and I believe after this exhaustive presentation from Wasim Saab, we must have some energy left to observe some more things about the revival. Wasim Saab has given a very comprehensive presentation while highlighting each and every aspect which can be covered by anyone regarding the revival and the restructuring of the company, while also elaborating the procedure involved, how it can be approached to the relevant forums for in these type of the schemes of the arrangement. My component is a slightly different and very small component of the revival. The question arises in the mind whether every company is entitled for the scheme of the arrangement, they can go for the scheme of the arrangement, or is there any difference for that? And the second question, supplementary question, is the companies which are under winding up, either those companies are also still eligible for the availing these options of the scheme of the arrangements or not. So my topic will cover that option, that aspects of the revival of the companies which are under winding up. So what is the winding up? First of all, winding up is actually end of the company, the process to kill the company. So this uh, when a company put into that phase for the winding up, we will just discuss about the options, 'cause still there are certain options that company can be revived. So the first answer for all of these things is yes, we have the options, but in the winding up there are different stages as well. In the winding up there are different stages as well, and we have to look into to what extent and at what stage we can have an option for the revival of the companies. So we will be discussing in the outlines the revival of the companies under the winding up. Those companies which are under winding up, whether they can be revived or not, and if they can be revived, what will be the revival plan for them? What are the prerequisites? What are the requirements for the revival plan for those type of the companies which are under winding up? And the next question is, the company is being wind up. The natural question is that when the company is going to kill, who will be the responsible person? Who is the authorized person who can bring the revival plan? Third portion there will be. And fourth one, the process, the procedure, how one can approach for the with the revival to the relevant forum. Why be that it is a commission. Commission means the Security and Exchange Commission of Pakistan, or in the court. And then how the commission will evaluate that revival plan and what will be the outcome of that revival. So we will discuss one by one. Revival of the companies under the winding up. Winding up, as I said, that there are three stages for the winding up. One, we can say a pre-winding up stage, where the commission grants the sanction for commencement for the winding up. This is winding up where the commission has to commence. But the winding up before that, we can say that there are three kinds of the winding up. One is a forced winding up, which is through court. Another is a voluntary winding up, which can be done by the members, by the creditors, with the consensus of all the stakeholders. And the third one, the third one is a voluntary winding up, but still under the supervision of the court. So these are the three kinds of the winding up. And first of all, I will discuss about the winding up which the commission is authorized to initiate. For that, there's a first stage is that the commission grants the sanction for commencement of the winding up the proceeding. Now the question will arise whether at that stage, when the winding up petition has not been filed yet, but the commission has granted a sanction for commencement of the winding up proceeding, whether the revival can be bring at that time or not. This will be the one of the question which we will discuss. And another one, the second stage, naturally, the sanction has been granted. The winding up petition has been filed in the court. The winding up is always filed in the court because this is the jurisdiction of the court under Section 6 of the Companies Act. Only a court can winding up a company, other than those which is a voluntary winding up, which the members themselves decide that they will going for the winding up of the company without the intervention of the court. So once the winding up petition is filed and the winding up proceedings has been started, so at that time, whether revival can be bring in place or not. And the third stage will be winding up petition, sanction has been granted, winding up is filed. Now the third stage will whether during the winding up petition can someone approach for the revival of the company. And there is another stage when the winding up order has been passed. And if the winding up order has been passed, when and how a revival can be bring for the company or not. And there is another stage because the company is not over until unless there is a dissolution order for the company, because the company ends the life of the company will ends when there is a dissolution of the dissolution order of the company. Till that time, company will still be considered as a normal company for the purpose of the applicability of the company's law. So the last question will jump in the mind that if the company, even if the company has a dissolved, there is a dissolution order of the company, whether there is any possibility or probability that revival can be bring for that company or not. So we will be discussing all these things in the coming slides. Revival plan, naturally, Wasim Saab has very exhaustively discussed what it is a revival plan. It may include the debt restructuring. It is an operational reorganization. It is a business plan amendment, change in the management or ownership. Now, I will slightly highlight these things with the reference while giving the reference to certain court cases as well, because the winding up naturally these goes to the high courts. So the naturally there is a link for the courts cases as well. Debt restructuring, when some company is default in payments of the debts, and naturally creditors has the right to go to the court for the winding up of the company, obviously with the sole objective for the recovery of their money. So in these type of the cases, whether the revival can be effective or not, with the past, you can say after 2017, when this Companies Act has been promulgated, thereafter there is a shift in the judicial precedent as well. They encourage that companies should be given an opportunity, even during the winding up, they should take some efforts for bringing some revival plans for the revival so that the business can continue. Because they said that death of the company is not a solution to anything. So, for the debt restructuring, we have witnessed that there are certain cases in the recent past in which the courts have given a opportunity to the company, to the creditors, that they should sit together, they can negotiate with each other, and then they can bring some plan to the courts for the sanctioning of the revival. I can uh, give a reference to a famous case of Chinab Limited. They defaulted, and their winding up petition kept pending for almost a decade. Finally, there is a settlement between the creditors and the company, and the company's winding up was reversed, and the company back to the normal count. And in the recent past, I have an opportunity myself to appear before the court. There was a company, it's a Moga Valley company, in which has defaulted and against lending given by some foreign consortium bank, Netherlands-based bank, and the petition kept pending. Official liquidator has been appointed in that company. Company is about to dissolve. There is a dissolution order is ready to be passed, but the court has taken uh, another extra step, and while said that bring the management notice again, ask the management to come to the court and then ask the bank representative as well, why not there should be taken one attempt that the company can be revived, and then finally with the assistance of the court, it gets settled. the company ready to pay a certain amount to the banks, and the bank also give the consent for that, and then the company, the, even in that case, there's a liquidator has been appointed, and the court has reversed that order, and the company, the winding up has been set aside at that time. So all these cases, we, for keeping in mind all these things, that's why in the, as Wasim Saab has highlighted in the frequently asked questions, we have specifically given a certain reference to the court cases while we are addressing the what are the prospective questions that can be in the mind about the revival of the company during the winding up. So operational reorganizations, this is also one of the reason for the revival of the company. Some companies, you can say there are certain issues, they might have a need to change certain reorganizations. So that can also be one of the solution for the revival of the company. Even during the winding up, they can bring that business plans. Some companies amendment, they can change their business plan. Some companies involved in some, you can say, license activity, some insurance businesses, some leasing businesses, but time comes they realize that this we cannot do this business. They can change their business, they can come to some other normal business. So, and the fourth one is the change of the hands of the ownership. If someone can bring a new ownership, a new management, they can bring, and they can bring the reforms in the company. So all these things can be happened during the winding up, even if the winding up order has been passed, even if the liquidator has been appointed. All these, the company has the ample right. Any person who is interested in the affairs of the company, they have the right to bring a revival plan to the courts, and the courts are considering those revival plans. Now the question is, when the winding up has been filed, naturally the question comes into the mind, who is the responsible person? In a, in a Siraj case, Khalid Siraj case, Supreme Court, Honorable Supreme Court of Pakistan recently held that even in that case, a liquidator has appointed, liquidator has submitted a report, and there is a dissolution of the company. Even then, the court said that the company still can bring a plan for the revival, because the ultimate beneficiary or the owners still the company. So, company, first of all, the court has consistently had the company itself can bring the revival plan. Irrespective of the fact that winding up has been passed, dissolution order has been passed, even then the company can bring the revival plan. The creditors, naturally, debt restructuring, as we discussed earlier, the creditor has the right, and every shareholder, even a single shareholder, has the right. They can come to the court with certain revival plan. We have the hopes that the company can be revived if we do these things. And naturally, when there is a winding up order has been passed, once the liquidator has been appointed, liquidator step into the shoes of the management of the company. The liquidator can also bring the revival plan. Now, if any of these person is interested, they would like to bring a revival plan, what are those minimum things which must be a part of the revival plan? So this slide which speaks about this, it should be a comprehensive revival plan which obviously address the issues. These were the issues due to which we were under the winding up. While we are taking these steps, we will be covering all those aspects. We are covering simple examples of one company which is under winding up due to certain statutory defaults. They have not conducted their overdue OGMs, AGMs. They have not finalized their accounts, they have not submitted their financial accounts. So they can come to the court with this thing that we, the management or the shareholder, are ready to to do all these compliances, and we are ready to, we either they can demonstrate to the court that we have submitted, we have conducted our overdue meetings, statutory meetings, we have finalized our accounts. Now the reason due to which we were before this, we are this before this court for the winding up, that does not exist more. So these are the some things which can be one of the reasons that the revival should be done. Likewise, the company has committed certain default. They they won't be able to pay their debts, and they are saying that okay, we have the plan. We are restructuring. We have restructured the loans with the financial institutions. Either they have committed certain defaults with the consumer, with the customers, and they said that okay, we are ready to overcome all those defaults. So anything can be anything which at the time of initiation of the winding up become the reason for the winding up, but due to these steps that will be no more be a reason, then it can be a good ground for bringing a winding up, for the revival of that winding up company. Now, once the winding up, once the application has been filed, in the slide you can see that we have mentioned that the application can be filed to the SCCP or the court. For the SCCP, why? Because it's about the pre-winding up when we have discussed about the sanctions when the SCCP is granted and the winding up petition has not been filed. So the company can bring the plan to the SCCP because the matter is not before the court. So at that time, the application will directly go to the SCCP. While in other cases, once a winding up petition has been filed in the court and matter is before sub judice before the court, then the application will be filed before the court. But the process is that the court always issue the notices to the SCCP or share the business plan, revival plan with the SCCP, and the SCCP, after examining its revival plan, give its expert view on this, whether this is a viable revival plan, workable or not. And as earlier discussed in the earlier slide, regarding the functioning of the MRD, Merger and Restructuring Department, you can notice that there are two committees which are assisting the MRD in performing this function. One is merger committee and another is a winding up committee. The winding up committee is bestowed with this mandate that whenever there is a revival plan in the court or in the SCCP, and it will be placed before that merger, that the winding up committee, and winding up committee examine that plan. They can issue a notices or call a meeting with the company, and after discussing all these things, they submit the plan, they submit their approval, you can say, they submit their comment observations on that revival plan to the court for assistance, because this is a specialized subject, and the courts are always relying on the observations and the findings and the assistance provided by the SCCP, because in a numerous judgment they said that the SCCP is the subject specialist to this, and we always rely on the SCCP, and we expect that the SCCP will provide us a comprehensive and meaningful assistance. Once the application has been filed, then SCCP examined this, its merger committee, MRD. Initially, this is the responsibility of the merger department, being the custodian of that record. They examined this application, revival application. They engage with the companies or their consultants after discussion and preliminary observation, discussion of the preliminary observation. They place this matter before the winding up committee. Winding up committee can conduct a proper hearing with the companies or their representative, financials and legal consultants. And after discussion, after a discussion and these deliberations, we can ask the companies, and we used to ask the companies to change their revival plan, to bring new things in it, and that's we guide them, because our role is a facilitator role. SCCP, being a corporate regulator, is always encouraged that companies should survive. So that's the reason we provide them, we go to the extra mile, we approach ourselves whenever there is application to us. This is our responsibility, me and Wasim Saab. We take an initiative by ourselves. We approach to the companies, we approach their financial teams, we approach their legal teams, that okay, come to us, let's sit together, and if there is any probability for the revival of the company, we are here to help you out. So this is our one of the responsibility and a statutory mandate as well, being a apex corporate regulator, that we have to facilitate the corporate sector. So once the application has been filed, that examined, then it go to the court in case of a winding up before the court. Otherwise, if it is not in the court, then with the commission, and then the commission, if it is with the commission, then the commission will take the decision on it, and they allow the company. What are the mechanism, how we can allow, we can discuss later in the later slide. Okay, how we evaluate this is almost I have already discussed that financial feasibility of the revival plan, sponsors, creditors, shareholders, what are support they're providing, because obviously in most of the companies they get default due to the lack of the equity, and that's the reason there is a fresh injection of the capital which is requirement. So we must see that whether there is an injection of the capital or not. Then is there any uh, compliance issues with the company, because whenever any default company or any company are winding up, they come to us. We try to ensure that the company, first of all, company should come on the normal counter from the default counter. They have to done all their overdue non-compliances. They have to be a normal company, and then obviously thereafter the company will be in a position to think about the business. First of all, they have to be on a normal counter where they have to overcome all their defaults, be that is a statutory defaults or the legal defaults, and thereafter the company will be in a position to take some decision for the revival of the company. And then obviously in case of a listed companies and a public companies, the commission always consider that what will be the impact of this revival on the public, whether it is in the interest of the general public, or is there any prejudice to the general public, while we have to strike a balance whether the winding up or going with the winding up is in the interest of the general public, or the revival of this company will be beneficial for the general public. So this has to be evaluated by the SECP in each case where the public stakeholders involved. And whenever there is a litigation, because once the companies are winding up due to certain defaults, the multiple litigation in the court. So we also looked into, okay, is there any specific direction from the courts regarding the affairs of that company? So we have to look all these things, and then we would be in a position to submit a comprehensive response to the revival plan submitted by the company, either to the commission or to the court. Post revival, once the revival plan has been submitted, if it is accepted, it means the company will be revived and the company will get another life. So naturally, we allow the company that. But one thing I must mention here that, okay, this is apart from this slide, but in many cases, we are trying that we should not give a blanket approval for the revival of the company, because it should be linked with certain milestones. If the company is here, so we can give them the relaxation, we can give them the approvals, but while achieving certain milestones, we can regularize their board with certain conditions that they can do. They, once we revive the board, the board has to take these steps, and thereafter another step. Then we are trying that we that's I earlier said that we are trying a level best. We should provide a maximum support and facilitate the companies, while also ensuring that there should not be any non-compliance left unattended, and as well as the benefit, the purpose, the objective. What is the objective? Objective is that company should be revived, not for this winding up be withdrawn, because we are trying to ensure that through this effort the company must revive and bring back to the business so that it can contribute to the economy. And in few cases, as discussed by the Wasim Saab, that in few cases even in the revival, there is also uh, a winding up of a company, because sometimes there's two companies and one company is going to merge to another company. Then the company which has been merged to another company, it will stand dissolve automatically. So this is also one of the option. Sometimes there's two sister companies, one company is performing well, another company is in default. So this is an option that they can merge with each other, so that in that eventuality, what will the benefit? Benefit will be the surviving entity will take over the liabilities of the another company. So the shareholders' right will be protected. So this is also one of the option under the mergers and amalgamations that, yeah, as earlier they have stated that this is also one of the option. If you would like to get rid of some company which is not performing, this is one of the option. Particularly for the public sector companies, this is a very good option. And obviously for the amalgamation, this is a fast track where the wholly owned, when you have a wholly owned 100% wholly owned subsidiaries, so you have very good options because you don't need to go to the court. You only need to submit a scheme along with the statutory form 8, and the commission will examine this, and you can have a very good option that one company will survive, another company will get dissolved without going into that process, without going to that cumbersome long process where you have to go to the court, you have to get the appointment of official liquidator who will liquidate the assets, distribute the same to the shareholders, and then you will be in a position to get the resolution order. So in these eventualities, company will be resolved without winding up. There's another option which I believe Wasila should discuss about this, because thereafter then will be a question and answer session. So I will left it for the Wasim Saab to address this, because it also pertains to the company's regulation, and Wasim Saab being has remained a registrar of the company as well, so he will be in a better position to explain this company easy exit scheme. I will slightly touch on this. Okay, when there's an option under the company's law, okay, when their company don't have any assets and liabilities, so this is the fast track option. You don't need to go to the for the winding up to the court or voluntary winding up. You can simply comply certain requirements of the SECP, and you can get exit from the. You can be strike out from the register of the companies. So this is also one of the option available in the winding up process. As I stated, just recapitulate all the things. Winding up, I stated you look at the 3-4 stages. One, pre-winding up, where the SECP has to grant the sanction for the winding up, and second is when the winding up petition has been filed, winding up it is in the court. Third stage, during the winding up, where the time the winding up order has not been passed, and the court has yet to decide whether the winding up should be passed or not. Once the winding up order has been passed, then the liquidator has to be appointed. Liquidator will step into the shoes of the management of the company. He will take over the responsibility of the company, and his responsibility is to liquidate the assets of the company and distribute the same to the shareholders. Okay? And once all these things are done, then there is a final order, there is a dissolution of the company. So, okay. And yes, liquidator responsibility is very important, because once the liquidator has been appointed, so everything go with his basket. So he is all in all in the company, because he stepped into the shoes of the management. So previously, although there is a mechanism under the company's law, there is provided that the SECP will maintain a panel of the persons which consist of which may be from your profession, chartered accountancy, your profession, and the lawyer as well. And the court has to appoint a liquidator out of that panel. So SECP is maintaining this panel, and we are trying our level best that we should bring people who have the relevant skill set for this, because it's a very specialized work. Because no lawyer, no chartered accountant exclusively can do it, because this required a very in-depth analysis of because you have to run the affairs of the company, you have to liquidate the assets as well, and you have to distribute it with the shareholder as well. Currently, now SECP is trying its level best. There should be, we must have a best people on this, and the SECP is now trying to bring, and we are in the process of that. We are trying to bring some accreditation for this. So we are trying to introduce some accreditation, some specialized training for those people who would like to become a liquidator. So people with the special skill set would be on the panel of the liquidators. If anyone would like to become a liquidator, anyone would like to become on the panel of the would like to become on the panel of the liquidators, they can do it. We have everything online. We have a system there, and we are also in the in that phase that everything will be online. But currently, you can have an access on an application on our website, and you can fill in. You can send to us. We can evaluate. We are evaluating them, and then we allow a person that you can be a in-paneled liquidator, and that credential of those people are available on the website. Currently, sir, we have 54. Currently, we have 54 people, 54 professionals. It's a mix of the lawyers and accountants both, which are on the panel of the SCCP. But we are trying to enhance the net of that panel, as well as we are trying to bring people who have a special skill set on this, so that the best peoples can be assigned this responsibility. And likewise, we are also coordinating, and we are also assisting the courts in this. Only the peoples from the panel may be preferred for this, but there is under the law there is discretion to the court as well. And in case of a creditors winding up, there is an option that the creditor has the right to suggest or nominate any person as a liquidator. But our preference would always be it should be from the panel, which is being maintained by the SCCP. So, liquidators and then the dissolution of the court, dissolution of the companies, and the revival, you can bring in any of the stage. The revival plan can be bring at any of the stage, even pre winding up, during the winding up, the moment the liquidator point winding up order has been passed, and even the dissolution has been ordered. There is, under the Companies Act provides that even dissolution within the 2 years of the order of the dissolution. There is a limitation for the dissolution. Okay, within the 2 years of the order of the dissolution, the company, the liquidator, the shareholder can bring a plan for the revival of the companies. Wasim sir? Over to Wasim sir to discuss about the easy exit scheme, and then we will go for the question and answers.
Yeah, I think I can be heard. आवाज आ रही है आपको? अच्छा. Easy exit scheme थोड़ा सा we have mentioned earlier. It is one of the modes besides merger. जिस तरह बताया हमने कि dissolution, for company dissolution there are different options. It may be a merger or amalgamation or winding up, and the modes which Abrar has mentioned. The easy exit scheme, basically the word scheme was there before 2017, but still we are going with this acronym CEAS, easy exit scheme, because earlier it was launched as a scheme. It was not part of the law, but when the Companies Act was promulgated in 2017, it was made a part of that law, and it was a facilitative measure to have a fast track option for getting the company struck off the register. But that is subject to the condition that the company shall not have any assets or liabilities. And for that, we require a certificate from an auditor, from an accountant, to certify that the company does not have any. What's said that there is no substratum. There is nothing,
Substance in
there is
the
no
company.
substance.
So this is the major requirement.
And other than that, there are certain procedural formalities like I think there is an application fee. If I can recall, it is rupees 10,000. Then there are board resolutions, affidavits, and things like that. So these are, and again, I would like to share that we have a dedicated officer. Earlier, this particular part was, you can say, deregulated. It was distributed amongst various officers. So what we did, we centralized this area at Lahore. There is a dedicated officer at our Lahore office. Whether the case is received in hard form, in physical form, we have also developed a portal
for the easy exit side. And what the applicant can do, it can log in after creating his login credentials. He can log in and submit the case through that portal. So it is a fast track mechanism under Section 426 of the Companies Act. There has to have two separate notifications for certain time bound, you can say time span. First notice is issued in the official gazette, and to receive any observation any stakeholder can have on this proposal for easy exit, and then that is followed by a final notification for publication in the official gazette. And whenever as soon as the prescribed time period is completed, that company is treated as struck off from the register of companies. So this is about it. And one more thing which Abrar was explaining about the role of the official liquidators. There is yet another area which you as our professional community members, I think you shall step in. It is the insolvency experts. Basically, the Corporate Rehabilitation Act 2018 also talk about certain professionals. They can play their role as mediators, and the qualification and experience and the fitness and property requirement are almost identical, just like official liquidators. And we have under both the laws, uh, like under the Companies Act, we have the provincial managers and official liquidator regulation 2019, I think. Yes.
Provisional manager and official liquidator.
So yes, exactly. So what the liquidators are supposed to comply with, there are certain fitness and propriety requirements, and there are the application mechanism. I think there is another form A which is specified in this regulation, which contains the specimen for application. So you can, right now there is no online mechanism. Anyone interested can file this application for becoming a provisional manager or official. So what is the difference between a provisional manager? Anyone from you, if you can share, what's your say?
What is the difference? Authority might be the same. What is the difference?
Difference when issued by the winding up as commence that time the court appoint the provisional manager.
And,
Basically, as the name suggests, a provisional manager is for a provisional time period. Basically, it's a stopgap arrangement. But normally, official liquidator is meant to take the whole process forward. So what the court can do for an interim, as an interim setup, it can appoint a provisional manager, basically.
normally is a it's the court practice that when there is a dispute between the company and its management and the shareholder, and the company consider that the management cannot perform the duties, they won't be able to manage the affairs of the company. The court appoints a provisional manager to look after the affairs of the company till the time the winding up order has not passed. The moment winding up order has been passed, then the official liquidator is appointed.
There is one more thing, sir, the administrator. Sometimes it's referred to ADR, like dispute resolution. So I think the provisional liquidator.
No, it's entirely different. It's the
Administrator when there is dispute.
provisional manager and the official liquidator role are might be the same, but you can give it the law has given us a name as a provisional manager. It is appointed till the time there is a no winding up order. The moment winding up order has been passed, then same provisional manager can become official liquidator, or some other person can be official liquidator. But the difference is the time when the winding up petition is pending and the winding up order has been not passed, the person who is appointed by the court to look after the affairs of the company is called the provisional manager. The moment the court order for the winding up of the company, then it will be called as an official liquidator.
Exactly.
Winding up. When the administrator is appointed by the to ultimate dispute solution by the court. So when the administrator or government company right, then right after that, also the director come on his own position. So in this case, there's no restraint in the corporate law.
Basically, the role of administrator pertains to the whenever there might be a case of dispute amongst the shareholders or management. So the administrator may be appointed by the commission, not by the court, to resolve. I think to get the company running. Basically, it may not be a company under winding up, maybe a running company. So that's the precise requirement. Although the cases are very rare, wherein the application for there is a requisite shareholding percentage. I think it is 20%. 20%, which is required for a petitioner or an applicant to move a case for appointment of administrator. And another area is that which I was referring, it is the Corporate Rehabilitation Act. Under that act, there are Corporate Rehabilitation Regulations 2019. So those regulations also, and the law in itself also mandates the appointment of insolvency expert. And the qualification and experience requirements are almost identical vis-a-vis an official liquidator. So even I think there are 9 or 10 officials who have so far been appointed as insolvency experts. Most of these are accountants. So this is yet another avenue which is unexplored. I think primarily the reason is that the CRA is not yet fully implemented, but when it is done, I think that it will be a good area to look for the professionals like you. You can step in, you can come in, get yourself registered, either as a liquidator or as an insolvency expert, which is a very promising area because this is a huge potential. Unfortunately, we have a very large NPL base here in Pakistan. There is a large number of cases here which are unaddressed due to disputes between the lenders and the borrowers. So it is here where the role of liquidators and the insolvency experts comes in. So huge potential exists.
Questions?
Bismillah ar-Rahman ar-Rahim. Now we move on to the question and answer session. And for that, we have an online moderator, Mr. Danish Reis. Danish, can you please turn on your video and audio?
Thank you, Imran sir, for giving me an opportunity, and thank you everyone who
Before
participated.
moving forward, let me introduce Mr. Danish Reis. Mr. Danish Reis is an associate member of ICMAP, and he is looking after the Marcom marketing segment of the United UAE Branch Council. So over to you, Mr. Danish Reis.
Thank you, sir. Once again, I would like to say thanks to all our panelists who gave us such a wonderful this presentation on the corporate restructuring. We have one question online from Mohammed Yusuf. If after submission a petition before court, company may apply CES after getting approval from the court?
I think it will be advisable if the company qualifies for being under easy exit, it shall not go to the court. But if inadvertently it has gone to the court, then it has the right to withdraw that application as well, for the reason that it is the court, the track for going to the court is not a fast track, basically. So it will take too long for the court to decide upon a case. So for that, I think if it qualifies the criteria which we have mentioned, no assets and liabilities, it can come to the SECP and after withdrawal of its petition from the court.
Thank you, sir. Thank you for your wonderful and comprehensive answer. I hope Mohammed Yusuf question is clear. May we have a few more questions from the participant? If someone will want to ask from our panelists, we are more welcome.
Yeah, Mr. Danish, there are some other questions you may ask. They are in the same panel.
I think the next question is about the definition of demerger.
Next question is that if after submission petition before court, company may apply for a company easy exit scheme after getting approval from court.
This is done.
Done. Okay. The next is that there is a difference. Sayyid Ashraf wants to ask about the difference of demerger and split off.
Basically, as I have told earlier, none of these terms has been defined in the Companies Act, be it merger or demerger, except amalgamation or scheme of arrangement. We have or the transfer and transferee company. These are the terms which have been defined, but demerger is not defined. So you can, generally speaking, you can say it a spin-off or a split off, but I think the spirit of the transaction is the same. A part of the undertaking is being taken out of the main entity, or either the whole company. If the whole company is going to be merged into another one, then we can say it is as amalgamation. So these are the terms basically which are normally, because these are not defined in the law, so these are in general parlance, these are normally used interchangeably or may be used. But when the scheme comes to the sanctioning authority, it has to see whether it is a merger, or if it qualifies for amalgamation, then that criteria has to be met. It has to be wholly owned. So I think there is no need to specify, because there may be certain jurisdiction where they have explicitly defined merger or demergers, but here not in Pakistan in the Companies Act.
Yes, Mr. Danish, please move on to the next question.
Sir, we have three questions, and so far our honorable panelists have given a very in-depth answers. I think we have one more question from the same Mohammed Yusuf. Another issue need to be clarified is effective date. When a COA is framed and submitted before the SECP, it's take long time, hence it has not to be charged after 6 months, or so as one has to file with FBR as well.
I think your question is about the time taken for
Yes, sir.
approval
Yes.
of the scheme. But I understand. Sorry. So basically, the process which I have shared through different slides, whenever a scheme comes to SECP, it is examined, it is evaluated, and then the matter is taken up with the petitioner companies or the legal counsel or the accounting professional who is a consultant. So normally we respond to the petitioner companies or their counsels within a defined time frame as per our internal SOPs. It cannot take that much long unless it is only the case, it may only be the case that there are certain issues which remain unresolved at the end of the petitioners, not the SECP. Otherwise, it is not possible, it is not going to take that much long at SECP. And then again,
Thank you, sir, for your answer.
sorry, I think you have also mentioned about the effective date. Effective
Yes,
date I
yes.
have already defined, although there is no such definition in the law itself, but the spirit is that it is that date. It is also called the appointed date. In certain, we have seen in certain schemes, appointed date or effective date used interchangeably. So it is about the date when the assets and liabilities are going to be vested into the transferee company, and it is the same date from which for taxation purposes the tax authorities are going to ascertain the date from where the property is going to be supposed to appear in the books of or the accounts of the transfer company, and after the effective date it is supposed to be reflected in the accounts of the transferee company for the purpose of taxation.
Thank you,
Mr.
sir. Thank
Danish,
you.
once a question is answered, please click the button of answer live and then click done.
Okay, sir. Then we have another question, Adil from Adil Aves. Kindly elaborate the liquidator's job as a career member for ACMA.
Yes, exactly. I have already mentioned recently with the members that it is a very promising, having great potential as a career, because we very few. A list of around 50 professionals is nothing in a country which have a large non-performing portfolio, and it is growing day by day. So there is a growing list of companies. Although it is unfortunate, it shall not be the case. But I think depending upon keeping in view the potential of insolvency professionals. And right now we are in the process, as Ibrahim has already mentioned, about the accreditation framework, which will further strengthen their role and will ensure capacity building through the accreditation mechanism, which is right now not in place. Then there is going to be a code of conduct for such professional as well. An examination will be conducted, by an agency or a body which will be specified by ICCP. So all these things are laid down in the substantive law, the Companies Act, as well as the Corporate Rehabilitation Act, which requires from us the laying down of procedures. Although the Corporate Rehabilitation Regulation already specifies the qualification and experience requirements and the code of conduct, but the accreditation mechanism is so far missing. Mr. Muzaffar Mirza, who have not for long joined us as a commissioner, he is very much interested and he has taken this agenda forward, and he is very religiously pursuing this particular area, and we are also assisting him in. We have developed a draft accreditation mechanism already, and you will shortly see in the public domain, and we will appreciate your comments as well. And we are also in the process of developing an online mechanism which will follow suit after the changes in the regulation based on the concept paper or consultation paper is approved, and it has seen the light of the day.
Thank you, sir. Thank you for your comprehensive answer. I hope Adil query is resolved, and I now I can see a lot of questions from our participant that shows that all are very engaged and they want to ask the different questions from our panelists. I will move to my next question, which is from Harun Yusuf Harun. As a speaker, referred English law for M&A definition and referred IFRS. How come SECP has restricted the practice to locally qualified, ignoring subject matter expertise for valuation in much superior in international qualification like CFA, CA, ICWA, SEMA, UK, etc., and the creating the expert panels ignore the international qualifications completely?
I think partly this is a good suggestions, but I understand that the authority there is a mention of the ACCA credential. I think that is already included in the list of credentials under the company's regulation. I hope that is there. Not the other qualifications like the SEMA or ICAW and the CFA, but I think that is a good suggestions to consider for having a relook at the regulations, and we can duly consider it at the right moment to revisit the eligible list of practitioners. This is a good suggestion.
Thank you, sir. I hope Harun got his answer. Now I will move to my next question, which is from Asif Rifat. If a private company has a loan from one of its shareholder and directors and shareholder wants to opt for CES, the company will have to pay back the loan to the directors before CES.
Obviously, because it says that no assets or liabilities without qualifying from whom the loan has been obtained, unless that loan is converted into equity, that may be a separate line of action. But insofar the borrowing stands in the name of certain person, it will not be eligible for easy exit.
Okay, so then I will move to my another question, which is from Amir Bhatt. Can we know out the total current 56 official liquidators on the panel of SECP? How many are ACMA or FCMAs? I think he is more interested to know about the data for the members.
As already explained during the
Hmm.
presentation, this list is already available on our website and anyone can go and see that.
Right now, the one is fellow alumni, Mr. Yusuf Khan. He's a professional in science expert, and the list is issued by the SEC. This is the one.
Because anyone who will approach the SECP will consider it, and they can be inducted in the panel. So the answer to the question is that this list is already available, publicly available. You can go and see that and find out your friends. Most of your friends must be there.
Thank you for your answer, sir.
As Braham have said, there is insofar the balance between lawyers and accountants is concerned, so there is a balanced mix. But if you differentiate within the professional accounting community, I think there is a sizable number which we cannot share off the cuff without looking at the numbers, which you can see on our website.
Thank you, sir. Thank you for your details. I think this participant can get the data from the websites. Now we have another question And if in case of 2 or 3 private companies without having a formal parent or subsidiary relationship, however, they are being managed by the family and friends, whether such companies may be considered under 284 to avoid the high courts?
Basically, the criteria is having the wholly owned structure. Basically, if the shareholders of all the entities are the same, I think that can qualify as wholly owned. It is without even if there is no direct or indirect parent or subsidiary relationship. So, although we have not came across, I doubt any such case, but I think there is a room for there is a cushion for considering it as a wholly owned group.
Thank you, sir. Thank you. I think we have answered so whatever in our pending all the questions. If anyone more participant want to ask question, they are welcome. So till then, I will over to you, Mr. Imran. Sir Imran.
Okay. Well, we have some other questions.
Again from Mr. Yusuf, if in case of 2 or 3 private companies, this has been addressed. In case of merger of 3 entities into one, like A, B, and C into A, if B and
This
C have to be liquidated or wound up separately or automatically be registered, likewise such registration.
I think these all are answered. Now we have a new question from the Mohammed Yusuf. What would be the modality in case of the 2 private companies and 1 LLP company, which is formed by merging the private companies? In that case, if A and B private companies want to merge into a new company, A, what will be the fate of the LLP, which is already partnership of A and B? How this LLP may be dealt with either formally to wound up or no?
So I think what he is trying to say is that the existing LLP has a few members which are companies, and if any of these companies got merged or amalgamated, so what would happen? So I think what would happen is that the name of the because they are the partners, basically the companies are the partners. What I understand from this query, so the name of those partners will be changed, obviously, because one of the partner will no more be there after amalgamation, and that will need to be notified to the registrar to the relevant statutory return required for updating or modifying the particulars of the partners or the names of the partners.
Okay, so then we have another question from the Yusuf Harun. I think he rewrite again. Even qualified professional by SECP established institute IFMP are completely excluded from the SECP and MA expert, while the IFMP other certified investment bankers.
Sorry, I did not get it. What he's trying to say? Question.
I think I will repeat the question again.
My
Even
question
qualified.
was IFMP qualification.
Yes, sir.
I think that does not pertain to today's session. It is not relevant to this forum. But what I understand, IFMP qualification is particularly for the financial sector. It has nothing to do with the liquidation or for liquidators or insolvency experts. And if that may be an area which is for that you would have to have a look at the IFMP framework in detail, which I am not as of now is not capable of to answer.
Okay, sir. Thank you, sir. Arun, I think you got your answer also. Now we don't have any questions in queue.
One more, I think one question is
There is one more question. Mr. Yusuf Khan has asked that under Section 2, subsection 1B, amalgamation means the merger of one or more banking companies or non-banking financial institutions. For instance, insurance companies or companies owning or managing industrial undertakings or companies engaged in providing services and not being trading company, etc. So whole definition he has quoted. And he said, the question is, however, the scheme of amalgamation as per Companies Act provides wider options and is open for all types of companies, irrespective of their status as public or private, as under Section 285, subsection 5 of the Act provides simple and easy way of amalgamation for small-sized companies under third schedule to the Act whereon. So after that, it is missing. Yeah.
I think what he's trying to ask is that a company may fall under two definitions. It may be wholly owned as well, it may be a small size. So what option would have to be adopted, which provides the, I think, the fastest track, or which requires the least number of steps to be completed or compliances to be made? This is what I understand from this query. So I think the answer is, if a company, you would have to go for an option which entails the minimal requirements. A company or two companies may fall within the definition of small size, both of them. And again, they are wholly owned by the same parent. So I think in the former case, you would have to file an application to the commission, which normally takes a bit longer than a case of Form 8 because they are wholly owned. So I think it would be advisable to go for Form 8 scheme of amalgamation, which is registered by the registrar and the company is done, which is being amalgamated, instead of going or coming to the commission for approval of a scheme of arrangement, being a small size company. So the former option is more advisable, going for amalgamation under section 284 instead of going for scheme of arrangement under section 279.
Okay, has this been answered? This one, the first one.
LLP, yes, it is done.
Yeah, that has been done. The final question. Yes, Mr. Danish, the final question.
Sir, we don't have any more question in our
Okay,
queue.
it is
We-
appearing in my screen. He says that Mr. Yusuf Khan, the final question from Yusuf. In case of SSE, all requirements of SOA has been fulfilled, especially there is no creditors or third parties being affected by SOA. If there is any requirement of appointing an insolvency expert to hold BOD meeting in his presence.
Basically, insolvency expert, if you go by the defined term, it is meant for mediation under the Corporate Rehabilitation Regulation 2019. So your question is, in case of small size entities, if all requirement of SOA have been, there is no creditor. So I think if there are no creditors, then the role of insolvency expert does not arise anymore. So this is not the case as you are suggested or you have asked for. The disparity between the definition of merger and income tax. Achha, the next question is again from Mr. Yusuf. There is disparity between the definition of merger. Neither the term merger has been defined under Companies Act nor under the Income Tax Ordinance. So I think you shall have a look again in the two laws, which does not contain any definition. I think insofar the Companies Act is concerned, I'm dead sure about it. There is no. I've already mentioned within my presentation that these terms have not been defined, merger or demerger. But insofar the Income Tax Ordinance is concerned, I understand as far as the amalgamation is defined, but I doubt there is any definition of merger or demerger. But you can verify it from the law itself, which is not the law administered by ICCP.
One thing I can add this. The question of definition, because the terms which is used in the company law is a schema. And as highlighted time and again by the Wasim Saab, that is a judge-made law. And in the various precedent, in the judicial precedent, the court has used this term, the merger, demerger, amalgamation, scheme of arrangement. The original side is scheme of arrangement, and there's a various judgment on this. This is a very exhaustive term has been used, which can cover any. You can perceive any scheme which can be come into. It can be a merger, demerger, amalgamation. So that might be the reason. Giving a definition to these terminologies might restrict the scope of that section. So this is the reason. This is this kept open. Legislator intended with the intention that it should be open, because no one can perceive that this scheme can be merger, demerger, because tomorrow you can see any new thing which can come. That's the reason the word scheme of arrangement has been used.
But Mr. Brar, normally, if you look at different laws, the definition is given that, for example, merger means this, and this, and includes this, or maybe another. So you specify some areas that are included and then leave it open-ended. So
Yes, exactly. And another dimension is that
Here is exactly the same. Here is scheme of arrangement. Then one scheme of arrangement has been defined by the courts and the different judgments. The scheme of arrangement includes the merger, scheme of includes the demerger, includes the amalgamations, includes the spinning of the anything. Which if they are saying even there is any compromise between the members or the creditors, that can also come into the scheme of arrangement.
exactly. But if you can refer to the CCP regulatory framework, I think there is a definition of merger there. And for the reason,
Question by Sam Yusuf Shah.
I think
And
that's
sir,
the
we
reason. Sorry.
Yes, sir, you can carry on. Sorry.
Okay. So basically, they approve the merger. That is a merger control law, unlike the company law, which deals with the scheme of arrangement. And being a merger control law, the CCP, the Competition Act, duly gives certain parameters for mergers and acquisitions. And there are different types of mergers which have been defined under that law, but not within the Companies Act. That is understandable for the reason that they are supposed to define the size of the entity which is undergoing or which is it is apprehended that is going to dominate the market, and for that market dominance to be certain, they have to have certain parameters like the turnover or the size of the assets, and these are the parameters which have been defined. So I think it will not be advisable in the company law, and this is not the norm across the globe. We are following here we are one of the common law countries, and the English law, I doubt there is any country where these terms have been defined within the company law itself.
okay, now we move on to the questions from the hall. If any participant present in physically over here, if they have any question, they may ask. Yeah, Mr. Fasahat has a question. So I would request the tech team to please hand over the mic to him.
Assalamu alaikum. Sir, first of all, as a newly qualified student
Can you
of
please
ICMA,
put it near to your mouth? Yeah.
sir, I'm very thankful to you as a newly qualified student of ICMA. You have provided us with this opportunity to learn about the corporate restructuring. Today, after this seminar, I have two basic questions regarding the merger and restructuring committee. Basic for merging and restructuring committee. What specific criteria does SCCP use to assess a restructuring provision which is probable and measurable under IAS 37? Is there any specific criteria which SCCP use to assess the restructuring provision which is being shown in the financials? Even that financial got audited, but still, is there any specific criteria SCCP used to assess that?
Okay, basically, I think you will be aware of the fact that there is a framework for common control transaction as well.
Yes, sir.
Beyond the IFRS. So normally, what we see in many cases, they are transaction between related parties, and if they are related parties, there are various exemptions available for common control entities by virtue of the standards which have been notified by ICAP, duly approved by SCCP as well. So I think that is an area which needs to be looked into, whether they are unrelated parties or related parties. And when we look at the transaction, and for that we ask if the company has not filed or not provided the financials. So we are supposed to take care of whether the calculation of the swap ratio that is based on the valuation standards. Although Pakistan has not yet adopted the international, there is a body which is called International Valuation Standards Council, but their standards are followed by a large number of countries. But so far here in Pakistan, none of the accounting body has adopted. So So we have to go with the accounting standards, the valuation criteria which have been specified. So those are examined, and if there is nothing which signifies a departure from those standards, then the merger committee, I think it does not object. I have also mentioned in the case laws that what the courts or judges have said, that you have to rely upon the report of the
Relating to this, I have second question. If the restructuring plan amended, how does the ACCP handle subsequent changes to the provision after initial recognition?
sorry, what is
Sir,
amended?
if the restructuring plan got amended,
Amended.
so how does the ACCP handle subsequent changes to the provision after the initial recognition?
Okay, basically you are talking about restructuring plan,
Yes.
not the scheme of arrangement, right?
This is a restructuring plan.
Basically, it is not a formal legal document. Restructuring plan, basically, you can develop a plan on your own. Although we have a template which we share with the applicants whenever a revival restructuring plan comes to us. So we advise them to follow a particular template, which is still not a part of the law, because not everything can be made a part of law. Just like a scheme of arrangement is not a part of law, it has been kept open for any conceivable transaction, and this is the norm across the globe. So restructuring plan, basically, when it comes to us, and normally it is not perfect because it is very rare right now. Very few cases so far we have handled. So the parameters we have defined, like there has to be crisp timelines to be substantiated by evidence. Like if a company says that I am planning to inject certain equity, so that has to be supported by a letter of intent, a letter of comfort from the sponsor, the proposed sponsor. If they say that they are going to change the management, so what we will do, we will have a look at the fitness and propriety of those persons, whether or not they are qualified, whether or not they have the expertise in the particular sector they are going to supposing in the rehabilitation plan. So these are the things which are normally taken care of. Ownership, basically, what changes are made and whether these are substantive, these are substantiated by a formidable plan, and there are documentary evidence to that effect. And secondly, if there is a management or there is a change in management, because these are the two main things, the skill and the capital. So both things, these are the normally which we looked at, followed by the timelines. These have to be crisp timelines. These have to be followed. Although the companies can come to us for extension in the timelines, and if we feel that it is not deliberate, it is deliberately avoiding the timelines or deferring their targets or their plan. So normally we allow those extensions.
Okay, sir. Thank you so much.
Bismillahirrahmanirrahim. Sir, thank you. First of all, I really want to thank the TSPD Committee of Islamabad Branch Council and the delegation from the SCCP for arranging such a session full of learning, nurturing and zenith. Sir, my first question is about the SPAC, Special Purpose Acquisition Company, whose principal line of business is merger and amalgamation. So as I thoroughly see the slide, there is nothing about the SPAC, Special Purpose Acquisition Company, whose principal line of business is to, within 36 months, whenever there is a merger or amalgamation scheme, to उसको पूरा करे, merger and amalgamation scheme को.
Basically, it's a service provider, you can say.
नहीं सर, जो हम कॉर्पोरेट लॉ में पढ़ते हैं, हमारी कॉर्पोरेट लॉ में स्पेशल पर्पस एक्विजिशन कंपनी है, जिसका काम प्रिंसिपल लाइन ऑफ बिजनेस ये है कि वो जहाँ भी मर्जर एंड एमलगमेशन की स्कीम हो और उसको कमीशन 36 मंथ का टाइम देते.
I think he is referring the corporate restructuring companies.
उसी से रिलेटेड
that there is a framework which is called Corporate Restructuring Companies Act 2016. So I think it's not the SPAC. SPAC is not merger or
नहीं सर, this is special type of companies, special purpose acquisition companies.
They acquire the
this is a special, you can say it's a special purpose companies, but that is acknowledged as a CRCs in our law, the corporate restructuring companies. Law has given them the corporate restructuring. We have currently we have only two companies, but that is not exclusively, that is not dealt under the corporate merger and restructuring law. This is a Corporate Restructuring Companies Act 2016, under which these companies are licensed by the SCCP.
As a public limited company, listed
licensed by the SCCP. With this mandate, they can take over the non-performing loans and the non-performing companies for the revival of
the SPAC. I think the SPAC is there. There is a, you can say, there is a type of entity but it is more generic. It is like a vulture, you can vulture capital hunters, what you said, that they look for distressed entities, they can acquire their operations or assets, but that is a separate proposition. It's not like this CRC. CRC is here, is meant for, as the Brad has explained, to take over the non-performing or distressed assets of the banks through an agreement. And for that, there is a corporate restructuring board which has to approve this. This is also sort of scheme, just like a scheme of arrangement.
So the second question, the second question is about the merger. CCP, Competition Commission of Pakistan, whose in one of their core major function is merger lessening competition. कि वो इस तरह की mergers को नहीं होने देते जो competition को lessen करे. और अगर SCCP, if there is a conflict between the SCCP and CCPI, even though both are the commission, अगर Securities and Exchange Commission of Pakistan इसको allow करे, लेकिन CCP उसको prohibit करे, so that
very good question.
that
There is a certain confusion about this, and I must clarify this. Competition Commission of Pakistan का जो law है वो deal करता है कि जी आप what is the word pre-merger permission from the CCP. ठीक है, वो merger को sanction उस तरह नहीं करते, वो एक pre-merger आपको जो है ना एक permission देते हैं या approval आप कह सकते हैं कि जी they have no objection and they are giving
competition law की कोई violation नहीं
कोई
है.
violation, ठीक है. Once the company secured that permission from the CCP, thereafter they file a scheme of arrangement to the commission or to the court for sanctioning of the scheme. Sanction to the scheme of the arrangement, this power rests with the court or with the commission. So there's a question of conflicting or contradictory thing does not arise here, because that authority will give a permission that they don't have an objection because there's no contravention or there's no likelihood of any anti-competitive practices and something like monopoly नहीं हो रही इसमें, ठीक है. जब वो उसके ऊपर go ahead दे देते हैं तो then company comes to the court or to the SCCP wherever they have the right to go there, along with that permission or NOC. That we have also solicited the NOC or permission or approval from the CCP. They have also given us the consent, so we are here now before you are sanctioning us.
लेकिन सर उसमें ये है कि कंपटीशन कमीशन ऑफ पाकिस्तान 2 पेज में कहते हैं. फर्स्ट पेज में करता है, फिर सेकंड पेज में राइट आफ्टर 1 ईयर अगर वो लगे 30 डेज और सेकंड में 90 डेज. लेकिन आफ्टर रिव्यू 1 ईयर आफ्टर अगर वो देखे कि वो मोनोपोली या कंपटीशन को लेसन कर रहे हैं तो फिर इस मर्जर को वो अगर करे
तो
कि
उसमें देखिए सीसीपी की अपनी पावर्स हैं, उसमें एससीसीपी विल नेवर स्टेप इन, ठीक है ना. उनका अपने रेगुलेटरी उनकी जुरिसडिक्शन है जिसमें कोई दूसरी अथॉरिटी नहीं कर सकती इंटरफेयर. अगर उन्होंने एक अप्रूवल दी based on certain conditions or based on certain parameters which were later not followed, उस पे वो उनका एक्शन अंडर देयर लॉ, और वो करते भी रहते हैं. पार्ट ऑफ द न्यूज़ अक्सर आता रहता है, ठीक है जी, कि मार्केट डोमिनेंस हो गई, मोनोपोली क्रिएट हो गई, एंटी कंपैटिटिव बिहेवियर किसी ने किया, मतलब थिंग्स लाइक दैट. तो वो तो अपने लॉ में वो करते हैं अपने एक्शन.
सर द थर्ड एंड द लास्ट क्वेश्चन इज अबाउट द सप्लीमेंट्री जो ऑडिटेड. तो उसमें ये कि अगर सप्लीमेंट्री वो फर्स्ट क्वार्टर की हो या सेकंड क्वार्टर की करे तो उसकी लिमिटेड स्कोप रिव्यू होती है एज पर द कंपनीज एक्ट. और उसने कहा सर कि उसकी प्रॉपर ऑडिट्स होने चाहिए. तो
देखें, सप्लीमेंट्री ऑडिटेड फाइनेंशियल स्टेटमेंट्स का मतलब ये है कि दैट हैज टू बी प्रॉपर्ली ऑडिटेड. द लिमिटेड स्कोप रिव्यू विल नॉट सफाइस बिकॉज इट विल नॉट मीट द रिक्वायरमेंट्स ऑफ लॉ सिंपली. So because the company is going for a major organic transaction and it will have to spend certain money, obviously वो पैसे देना ऑडिटर को, वो उसका ऑडिट कराए, सो किसी ने नहीं रोका.
लेकिन अगर इंटरमली हो जाए कि एनुअल अकाउंट्स नहीं है और बेस्ड ऑन द फर्स्ट क्वार्टर और द सेकंड क्वार्टर की उसकी तो फिर लिमिटेड स्कोप रिव्यू होती है.
नहीं तो आप ऑडिट करवा लेना, आपको रोका तो नहीं ना किसी ने.
वर्ड जो टर्मिनोलॉजी यूज हुई है वो ऑडिटेड अकाउंट्स, वो जो लॉ में है,
एग्जैक्टली
लॉ में जो वर्ड यूज हुआ है सप्लीमेंट्री ऑडिटेड अकाउंट्स.
देखिन
कॉमन उसको लैंग्वेज में कहते हैं स्पेशल पर्पस अकाउंट्स होते हैं फॉर द पर्पस ऑफ द मर्जर. तो मैनेजमेंट अकाउंट्स भी उनको कहते हैं.
सर बात पता है देखें, व्हाट इज द स्पिरिट ऑफ लॉ, मैंने पहले भी जिक्र किया था. देखें ये इन्फॉर्मेशन जा रही है शेयर होल्डर्स के पास टू मेक अ मेजर डिसीजन. अब वो अगर अनऑथेंटिक है, नॉन ऑथेंटिक है, रिव्यूड है, सिर्फ ऑडिटेड नहीं है, तो उनको क्या वो कॉन्फिडेंस लेवल होगा उनका. तो ये लॉ ने जो रिक्वायरमेंट रखी है, कोई उसका विजडम है ना, वो विजडम यही है कि आप उसको ऑडिट करवाएं, थोड़े से पैसे देंगे ऑडिटर को, ऑडिट हो जाएगा आपका. बेशक 6 महीने के लिए जितना भी है, जो भी टाइम फ्रेम है,
आपका मर्जर जरूरी नहीं है 30 जून को ही हो, उसके अलावा अगर होगा तो आपको ऑडिट प्रॉपर करा के चीजों को करना पड़ेगा।
And
हाँ वो तो जरूरी है।
sir, आखिरी क्वेश्चन है about वो accounting
You
से
have
भी
said that
related
the
है।
third question is the last question.
नहीं
This is
सर,
not fair.
one more.
मैंने on behalf of all up
ये सर IAS ट्विन में इवेंट्स अप टू रिपोर्टिंग डेट, क्या अगर रिपोर्टिंग डेट के बाद इस तरह की कुछ इवेंट्स आ जाए कि द कंपनी इज नो मोर रिमेन गोइंग कंसर्न, गॉन कंसर्न हो जाए, तो इस केस में फिर रिवाइवल प्लान कैसी होगी? क्योंकि उस टाइम में तो जो कंपनी के अकाउंट है वो भी ब्रेकअप बेस पे बनते हैं और जो उसकी वो NRV बन जाती है, दैट एलिजिबल बेस पे।
मैं आपको सॉरी कंप्लीट आपका कंप्लीट हो गया क्वेश्चन।
यस सर।
कंपनीज एक्ट इस हद तक आपको प्रोवाइड करता है कि एक कंपनी which has been wound up for long and it has found that it has certain assets and liabilities, so it can go for restoration under section 425, right? Or the only condition is that it has to have certain assets which is duly verified, which are duly verified, and if it has, then it can come to the commission for restoration to the register of companies. जब ये चीज हो सकती है तो एक कंपनी जो आप IAS का रेफरेंस दे रहे हैं
IAS 10
कि इस कंडीशन से अगर गुजर रही है तो, लेकिन ये तो एनी टाइम दे मे कम इन स्ट्रेटेजिक इन्वेस्टर और इवन द कंपनी इटसेल्फ इट कैन प्लान फॉर अ टर्न अराउंड बेस्ड ऑन सर्टेन मनी, इक्विटी इंजेक्शन वही लोग दे रहे हैं, राइट इशू कर रहे हैं, बाहर से पैसा अगर नहीं भी आ रहा तो वाई इट कैन नॉट बिकम why it cannot go for a revival if it has the skill set or the money for a turnaround.
अगर सर कोई नेचुरल कैटास्ट्रोफी आया कि कंपनी बिल्कुल रिमेन नो मोर,
ठीक है,
तो फिर इस केस में रिवाइवल प्लान, जिस तरह सर ने कहा कि अगर इवन दो के वाइडनिंग अप या डिसोल्यूशन के ऑर्डर भी पास हो, कोर्ट ने दियो, तो उस टाइम भी वो अपनी रिवाइवल प्लान दे के वो
रिवाइवल प्लान मैंने क्या वर्ड यूज किया था कि व्हेन देयर इज अ वायबल रिवाइवल प्लान,
Yes, sir.
तो उसकी वायबिलिटी होएगी तो बनना। रिवाइवल इज नॉट लाइक दिस कि यू कम एंड आई एम गोइंग टू रिवाइव, नो नो, देयर मस्ट बी सम वायबिलिटी अबाउट दिस ना, कि भाई जब आप खुद ही कह रहे हैं कि कोई ऐसा अनफोर्सीन इवेंट हो गया जिसकी वजह से कंपनी में तो कुछ जान ही नहीं दी, ठीक है, तो देन द क्वेश्चन ऑफ रिवाइवल डज नॉट राइज। ठीक है, रिवाइवल किसके लिए? रिवाइवल ये आता है, उसके पीछे इंटेंट क्या है कि जी कंपनी में जान है, कंपनी अपना बिजनेस कर सकती है, कंपनी अपने आप को संभाल सकती है, कंपनी के पास इतनी एसेट्स आगे हैं या कोई इक्विटी आ गई है। जब आपके जो कंपनी में तो कुछ इट्स नॉट नो मोर अ गोइंग कंसर्न, ठीक है, तो देन द क्वेश्चन ऑफ रिवाइवल डजंट राइज।
सर वन क्वेश्चन रिलेटेड टू यू के सर आपने कहा कि रिवाइवल प्लान एनी मेंबर भी दे सकता है, तो कंपनीज एक्ट में ऐसा है कि अगर किसी के सब्सटेंशियल राइट्स को वो उसमें अल्ट्रेशन आती है या आर्टिकल ऑफ एसोसिएशन में, तो उसके लिए एटलीस्ट 10% ऑफ द कंपनी हैविंग शेयर कैपिटल वोटिंग राइट्स होना चाहिए, या कंपनी लिमिटेड बाय गारंटी नॉट हैविंग शेयर कैपिटल तो उसका एटलीस्ट 110 मेंबर्स का होना चाहिए। तो इसके लिए इस तरह
रिवाइवल, मैंने कहा कि रिवाइवल प्लान कैन ब्रिंग बाय एनी पर्सन, बट रिवाइवल हैज टू बी अप्रूव्ड बाय द मेजॉरिटी ऑफ द शेयर होल्डर्स। ठीक है, देयर इज अ डिफरेंस अबाउट, ठीक है, एलिजिबिलिटी की बात कर रहा है। एलिजिबिलिटी शेयर होल्डर कैन ब्रिंग द रिवाइवल प्लान, बट दैट रिवाइवल प्लान हैज टू गो टू द एंटायर शेयर होल्डर्स। वो वहां पे जो उसकी रिक्विजिट शेयर होल्डिंग जो रिक्वायर्ड है वो अप्रूवल होएगी, तो तब जाके पहले बोर्ड उसको अप्रूव करेगा, फिर
एनी मेंबर कैन गिव द रिवाइवल सजेशन दे सकता है, और
हाँ सजेशन दे सकता है, लेकिन जरूरी नहीं है कि उसको उतनी अक्सरियत हासिल हो कि वो अप्रूव हो जाए।
वही बात
दे
है,
तो सकता है।
वो बात है, देखें ना,
Misconception.
इस चीज को जहन में रखें कि हम ये बात कर रहे हैं कि अगर किसी ने रिवाइवल लिया है तो उसका मतलब ये नहीं है कि रिवाइवल हो गया, ठीक है,
वो प्रपोज कर रहे हैं।
हम तो आपको प्री रिक्विजिट्स बता रहे हैं और ये बता रहे हैं कि जी देखो ना, एक बंदा एक शेयर होल्डर है, मैं एक शेयर होल्डर हूँ, मेरे पास चले मिनिमम 10% जिस तरह आपके शेयर होल्डिंग है, इवन देन आई एम ब्रिंगिंग द रिवाइवल प्लान, ठीक है, विद 10% शेयर होल्डिंग। मैं कहता हूँ कि जी मैं इसलिए ला रहा हूँ ये रिवाइवल प्लान कि आई कैन अंडरस्टैंड कि जो मेरे पास प्रपोजल है, अगर इसको मैं अपने मेंबर्स के सामने, बाकी शेयर होल्डर के सामने रखूंगा, तो आई एम वेरी कॉन्फिडेंट कि ये उनको भी अपील करेगा और उसको सपोर्ट करेगा। ठीक है, दिस इज द कॉन्सेप्ट। और एक ये भी हो सकता है कि कोई बंदा किसी के जहन में वन ऑफ द शेयर होल्डर है, वो कहता है ये कंपनी है, इसने कोई ये वाला बिजनेस यूनिट है किसी और कंपनी का है, डॉक्यूमेंट पड़ा है, या कोई और इससे भी ज्यादा गई गुजरी कंपनी है, वो कहता है कि जी हमें ये ज्यादा सूट करता है, हम अगर इसको ले लें कम पैसों में मिल रहा है, ठीक है, ही पुट ऑफ दिस सजेशन बिफोर द शेयर होल्डर, ये व्हाई नॉट वी शुड डू दिस, ठीक है, तो बात
फिर
अगेन,
अप्रूव होता है या नहीं, वो
ये
अलग चीज
क्योंकि
है।
देखो ना बात ये, अगर तो कंपनी का बोर्ड है तो पहले बोर्ड उसको अप्रूव करेगा, बोर्ड जब अप्रूव करेगा तो उसके बाद वो शेयर होल्डर्स के पास जाएगा, शेयर होल्डर्स को ओके करेंगे तो उसके बाद जो है वो आएगा रिवाइवल प्लान। ठीक है, बात यह है कि जो ओनर्स हैं उनकी अप्रूवल तो रिक्वायर्ड है, शेयर होल्डर्स आर द ओनर्स ऑफ द कंपनी। ठीक है, दिस नॉट लाइक दिस कि भाई कोई बंदा आए और कह दे कि जी करते हैं। वो जो लॉ की रिक्वायरमेंट्स हैं, जो प्री रिक्विजिट्स हैं, स्टैट्यूटरी जिसे कहते हैं प्री रिक्विजिट, दैट हैज टू बी कंप्लाइड।
अच्छा, एक चीज मैं और ऐड कर दूं उसमें, देखें आप सवाल कर सकते हैं जी कि कंपनी मरी हुई कंपनी है, डिफंक्ट है, उसको बंद करके नई कंपनी बना लें, कोई मसला है? नहीं है ना। तो कोई बंदा क्यों कहता है मैंने उसी को रिवाइव करना है? व्हाट इज द रीजन? वो ये है कि देयर इज अ लेगेसी, कंपनी की कोई गुडविल है विच इट वांट्स टू कैरी, वो नई कंपनी क्यों नहीं बना रही? लेकिन वो मुश्किल क्यों है? एक तो चले पैसा भी आ जाएगा, लोग भी आ जाएंगे, लेकिन वो क्यों डिफंक्ट हुई है कि वो इतने डिफॉल्ट कर चुकी है। जब तक वो डिफॉल्ट आपके रेगुलराइज नहीं होंगे, उस वक्त तक आप बेशक पैसा भी ले आए, आप नई मैनेजमेंट भी ले आए, यू विल नॉट बी रिवाइव। तो इसलिए ये मुश्किल है, ये इसलिए दे आर वेरी फ्यू केसेस। वरना आजकल पैसा आप नई कंपनी में लगा रहे हैं तो आप पुरानी कंपनी में भी लगा दें, ये तो कोई मुश्किल नहीं है। लेकिन असल इशू ये है कि रेगुलेटरी डिफॉल्ट्स, चाहे एसईसीपी के हैं या पाकिस्तान अगर लिस्टेड कंपनी है तो पीएसएक्स के हैं, बाइंडिंग अप सेगमेंट में पड़ी है, बाइंडिंग अप पिटीशन फाइल हुई हुई है, उसको रिवर्ट करना इतना आसान नहीं होता। वो जब भी होगा आप सारी अपनी हिस्ट्री क्लियर करेंगे, फिर आप आगे का सोचेंगे, पैसा लगाना है।
यू हैव टू कम विद द क्लीन स्लेट। तो मैंने कहा है ना कि जो भी आएगा, हम पहली चीज क्या देखते हैं कि कंपनी आए क्लीन स्लेट के साथ, कि पिछली रेगुलेटरी नॉन कंप्लायंसेस को पहले देखेंगे हम, उसको उसके फाइनेंशियल। एक कंपनी है जिसने 3 साल से 5 साल से अपने अकाउंट ही नहीं ऑडिट करवाए, वो कैसे रिवाइवल के लिए आ जाएगी? अगर वो आ भी जाती है, ठीक है, तो दे हैव टू गिव अस अ ट्रू एंड प्रॉपर अकाउंट्स कि भाई ये फाइनेंशियल पोजीशन है, इसकी बेस के ऊपर मैं आपके पास आ रहा हूँ। ठीक है, कि पहले मेरे पास कम पैसे थे, फिर कुछ ही आया, कुछ हमने अपना लैंड है वो सेल की है, कुछ हमने नया यूनिट एक्वायर कर दिया है, या वी आर गोइंग टू राइट इशू करना चाह रहे हैं, हम आईपीओ लॉन्च करना चाहते हैं, पब्लिक लिस्टेड कंपनी है क्या। मल्टीपल आइडियाज है कि भाई कंपनी में आपने बेसिकली इक्विटी इंजेक्ट करनी है। कंपनी किससे चलती है? पैसे से चलती है। ठीक है, तो भाई हमारे पास पैसा नहीं है, हम पैसा इस तरीके से ला सकते हैं, ये एग्जिस्टिंग शेयर होल्डर्स हैं, दे वुड लाइक टू इन्वेस्ट मनी थ्रू राइट इश्यूज के, हम उनको ऑफर करेंगे, वो आ जाएंगे। ठीक है, पब्लिक कंपनी, हम आईपीओ लॉन्च करना चाहते हैं, जो एक नया प्रोडक्ट लेके आ रहे हैं, आईपीओ लॉन्च करेंगे, वी फोरसी दिस कि जी इसमें इतने पैसे हमें मिलेंगे, जब वो पैसा मिलेगा तो हम अपना ये डिफॉल्ट क्लियर करेंगे, साथ हम गोइंग कंसर्न में कन्वर्ट कर देंगे। 100 ऑफ दी थिंग, दैट्स द रीजन। अगेन दैट क्वेश्चन वो बार बार जा रहा था कि मर्जर डी मर्जर उसको क्यों नहीं डिफाइन कर रहे। दिस इज द रीजन जो अभी मैंने आपको बैठे बैठे 20वीं चीजें बताई हैं कि भाई इतने ऑप्शंस हो सकते हैं स्कीम ऑफ अरेंजमेंट में, एनीथिंग इट कैन। शेयर होल्डर्स के आपस में एग्रीमेंट हो सकते हैं, क्रेडिटर्स के साथ हो सकता है, अच्छा बोर्ड का शेयर होल्डर के साथ हो सकता है, बोर्ड एक कंपनी का दूसरी के साथ हो सकता है।
मतलब इंटरनेशनली आप देखें इतनी इवॉल्व हो गई चीज़ें, आप उसको कॉर्पोरेट वर्कआउट्स भी कहते हैं। आप अगर इंसॉल्वेंसी लॉ को पढ़ें, जो अब वर्ल्ड बैंक की अनसिट्रॉल, देयर इज अ बॉडी यूनाइटेड नेशन की जिन्होंने बकायदा इंसॉल्वेंसी पे, देन देयर इज अनदर बॉडी इंसॉल इंटरनेशनल। आप कभी उनकी वेबसाइट पे देखें, और जो मॉडल्स हैं, ये दुनिया कहाँ तक चली गई आगे। तो अभी हमें ज़रूरत है बहुत चीज़ों पे प्रोग्रेस करने की। और एक चीज़ सॉरी मैं लास्ट कहना चाहता था, क्योंकि मोस्ट ऑफ यू आई थिंक आप प्रोफेशनल्स, आप प्रैक्टिशनर्स भी होंगे, तो हमारे पास जब केसेस आते हैं आप लोगों के एज रेगुलेटर, जब हम देखते हैं, तो व्हाट वी एक्सपेक्ट फ्रॉम यू के देयर हैज टू बी अ क्वालिटी एज अगेंस्ट अ केस जो कि कंपनी खुद लेके आ रही है या पिटिशनर आ रहा है। तो इसमें हमें काफ़ी देयर इज अ लॉट ऑफ रूम फॉर इम्प्रूवमेंट, बी चार्टर कंटेंट्स और कॉस्ट अमेंडमेंट कंटेंट्स और लीगल फ्रेटर्निटी। लेकिन ये है कि एज गेट कीपर्स एक आपकी जिम्मेदारी है, आप कोशिश भी करते हैं, बट व्हेन यू आर बीइंग पेड फॉर इट, तो यू हैव टू गिव योर बेस्ट शॉट, ठीक है ना, ताकि आप एक प्रोफेशन को भी अपना वो करें, अपहोल्ड करें, ठीक है, जो एक डिग्निटी है और जो उसकी क्वालिटी है। और दिस इज द लीस्ट वी कैन आस्क एज रेगुलेटर फ्रॉम द प्रोफेशनल्स।
I think ICMA that it should have a strong one-year training capability. Like
We already have, I think, none है ना? जी, already have. MOU already is. Yesterday they were here. They were with us. There was a big batch of students.
Yeah.
तो वो तो ये चलता रहता है।
स्ट्रेटजिक लेवल की वो कार्पेट क्लाउड में पड़ी होती है, तो नाउ वो जानते हैं कि अगर तो इसको मौका दी जाए तो 1 साल के लिए तो मोर बेनिफिशियल। वो किराया प्रैक्टिस
जी
आर्टिकलशिप
जी, इसमें हमारी कल बात हुई है एसईसीपी में उनके एचआर के साथ। हम फॉर्मली भी इसको एक दफ़ा फिर से भी दोबारा कर लेंगे, क्योंकि एमओयू होना एक सेपरेट चीज़ है और उस एमओयू को प्रैक्टिकली एग्जीक्यूट करना और उनको प्रैक्टिस लाना और म्यूचुअल बेनिफिट के लिए डेफिनेटली एसईसीपी का बर्डन भी रिड्यूस हो जाएगा। जिस तरह से बता रहे हैं कि जो एप्लीकेशंस आती हैं वो बेस्ट नॉक नहीं होती, उनके अंदर बहुत सारे फ्लॉज होते हैं। तो ये आज का जो पर्पस था सेमिनार का, वेबिनार का, ड्यूअल इसको हाइब्रिड इसीलिए किया गया कि जो प्रोफेशनल्स हैं हु आर वेंचरिंग इनटू इट, जो हमारे प्रैक्टिसिंग मेंबर्स हैं, क्योंकि हमारा टीएसपीटी का टेक्निकल सपोर्ट प्रैक्टिस डेवलपमेंट कमेटी का मैंडेट यही है कि हम अपने मेंबर्स को लेटेस्ट जो भी डेवलपमेंट्स हैं उनसे अप्राइज करें, एसएससीपी के साथ कोऑर्डिनेशन करें, जो इनको इश्यूज आ रहे हैं वो हम सुने, ताकि देखें ईज ऑफ डूइंग बिजनेस सिर्फ फॉर द बिजनेसमैन नहीं है, ईज ऑफ डूइंग बिजनेस फॉर द ईज ऑफ रेगुलेटर भी है कि आप रेगुलेटर का बर्डन कितना रिड्यूस करते हैं, क्योंकि उनका टाइम भी कीमती टाइम होता है, प्रेशियस टाइम होता है। तो अगर जितना अच्छा परफॉर्म करेंगे कंसल्टेंट्स, लॉयर्स, चार्टर्ड अकाउंटेंट्स, कॉस्ट एंड मैनेजमेंट अकाउंटेंट्स, उतना रेगुलेटर का बर्डन भी रिड्यूस होगा। तो इसीलिए आईसीएमपी और एसईसीपी आपस में कोलैबोरेट कर रहे हैं कि वो अब दोनों मिलके रेगुलेटर भी और कंसल्टेंट्स भी, ताकि बिजनेस कम्युनिटी के लिए भी हिंड्रेंस कम से कम हो। डेफिनेटली अगर एक बिजनेस कम्युनिटी कंसल्टेंट को कोई टास्क देता है और उसने अच्छा परफॉर्म नहीं किया होता और रेगुलेटर की तरफ से एतराज आते हैं, तो बिजनेस कम्युनिटी कहती है कि ये एसईसीपी ने हर्डल क्रिएट की है, हालांकि बेसिकली वो फॉल्ट होता है एट द फॉर द कंसल्टेंट सर्विस प्रोवाइडर। तो ये चीजें हैं, हमें मिलजुल के वी आर ए पार्ट ऑफ सेम कम्युनिटी, जिसमें बिजनेस कम्युनिटी का भी रोल है, जिसमें कंसल्टेंट्स का भी रोल है और एसएससीपी का भी रोल है। तो सब करेंगे तो ये जो भी प्रोसेसेस हैं ये स्मूथली हो जाएंगे और हम अपनी बिजनेस कम्युनिटी को बेहतर सर्व कर सकेंगे। एनी अदर क्वेश्चन जी? So, ladies and gentlemen, our time is definitely up. 6 o'clock से हमने 9 o'clock किया था, हम सिर्फ 5 मिनट ऊपर हुए हैं. So we are thankful on behalf of Islamabad Branch Council. I am really thankful to both the gentlemen, Mr. Wasim Ahmed Khan, who is the head of mergers and restructuring, and Mr. Ibrar Saeed, who is the additional director at SCCP for the same department. And we are also thankful to their commissioner, Mr. Muzaffar Ahmed Mirza साहब, उनके एचआर के लोगों के, वी आर थैंकफुल टू देयर ट्रेनिंग टीम, जिन लोगों ने ये सारी कोलैबोरेशन हमारे साथ सक्सेसफुल की. तो इंशाल्लाह वी विल कीप ऑन प्रोग्रेसिंग एंड कीप ऑन कोलैबोरेटिंग. Similarly, I would like to thank all the around 60 people were over there online and around 20 people were in the hall. So हमारी टोटल 80 की मिक्स थी. तो अल्हम्दुलिल्लाह बहुत सारे लोग अपडेट हुए, बहुत सारे लोगों की चीज़ें रिफ्रेश हो गई, क्योंकि बहुत सारे लोगों ने उस वक्त लॉ पढ़ा हुआ था जब कंपनीज एक्ट, कंपनीज ऑर्डिनेंस 84 था. तो सब्सिक्वेंटली बहुत सारी चीज़ें रिफ्रेश हुई और कोर्ट के डिसीजंस भी आते हैं, केस लॉज भी आते हैं. तो इन चीज़ों के ऊपर प्रोफेशनल्स को एक कंटिन्यूइंग प्रोफेशनल डेवलपमेंट का ये एक मैकेनिज्म है, जिसके थ्रू जो भी प्रोफेशनल्स हैं वो अपडेटेड रहते हैं. हमारी ये आज का जो जॉइंट इवेंट था एससीसीपी का और आईसीएमपी का, इट इज़ बीइंग टेलीकास्ट लाइव. आप इसको यूट्यूब के ऊपर भी सब्सिक्वेंटली व्यू कर सकते हैं, लिंक्डइन के ऊपर भी अवेलेबल है. हम आपके साथ लिंक्स शेयर कर देंगे ताकि आपके फर्दर अगर आप दोबारा से इसको एक दफ़ा से रिव्यू करना चाहें तो सारी की सारी रिकॉर्डिंग ऑनलाइन भी अवेलेबल होगी. सो सर अगेन वी आर थैंकफुल.
Lastly, I would also like to thank ICMAP, Islamabad Branch Council, for giving us an opportunity to interact with you, the professionals and the corporate sector. Otherwise, it will not be possible or easier for us to interact with this large number of professionals in one go. So I think it is a good opportunity for us to have feedback from you, as we have received a lot of questions and a couple of good suggestions as well, which will be taken care of at the right moment. And we look forward for your feedback, because we have many regulatory developments going on, and we, as a practice and even under the law, we are supposed to seek feedback from the public, including the professionals. So we look forward to hold the dignity of the profession. We look forward for your candid feedback anytime, like the accreditation framework which is in the pipeline. So we look forward for your feedback, or any other regulatory area which we normally share with you people with the public from time to time on different aspects, on different regulatory issues. So thank you very much for your patience, and thank you, ISMA.
Thank you, Wasim bhai. So, ladies and gentlemen, for the sake of the practicing profession, for the practicing members, so today we have learned many things about mergers, demergers, acquisitions, liquidation, winding up, and we have also saw that the practicing members can have these can add regular stream of revenue in the form of provisional managers, insolvency experts, and liquidators. So it is our urge for the practicing members to look into the possibility of these arenas, these avenues where they can support the business community as well as SCP. So inshallah, we will keep on collaborating and we'll keep on bringing some other themes that are pertinent, that are relevant to your